It's amazing to be here and see everybody, feel the energy of this room. It's been about 2 years since we've done this, and what a 2 years it has been for us. I was out in New York, and I was talking to another broker, and he mentioned an analogy that was like, it was like having a boat, a sailboat, and putting the sails up and feeling a huge gust of wind all of a sudden and just hanging on to the ropes. And that's where we were 2 years ago, and that's still where we are. So we've got a long ways to go, and I'm excited for a lot of things. So we've been here for a while, but since I've been here, I was thinking of our why. And does that not look like the American dream? I mean, my best friend from growing up around here in Encinitas, his wife was pregnant, and they were living in an apartment on the west side of Los Angeles by me, and it was getting to the the red line where his wife was about to have a baby, and they were really in the hunt for a house. And as you know, a lot of our borrowers out there make money from unique ways. They're entrepreneurs. Not all of them are the vanilla W-2 and fit into that QM box. And I plugged him in with a great loan officer here at C2 that navigated the landscape of finding them that best loan that met their needs, got them into that home, and they had a beautiful baby boy. And that really resonated for me. And I know, we're about, units, and there's loan volume, and there's all that, but I think if you take out all the minutia that you go through to get to that place, it's really all that matters. And, whether it's an appraisal comes in low, or there's an underwriter that gives you pushback, or whatever it is, those nuances of that transaction that tick you off, it's really, if you think about that end result and that impact that you have on that family, on that household, whether it be here in California or across the nation, or whatever state you are in, that's really the why. And that was really important for me because I remember my dad always mentioned we're here for a noble cause. And so that's a special thing. So where do we come from? Well, my story for my family began in the early 90s when my dad got into the business, and he was filling out loan applications on carbon copy paper. And I was probably cleaning his office to make a few bucks to maybe sneak a six-pack or something, I don't even know. But he came up with a software in Excel. He was a bit of an Excel guru, and it was a way to take an application and all the cells connected, and it just made things a lot easier for a loan officer to take an application and get information from a borrower. And that was the genesis of a razor-thin margin brokerage house. And he gave that away. He gave that software away, and whether the loan officers wanted to work for him or not, but that was really the start of a 90-10 split shop. And from there, it really grew. And it was that idea of giving it all away and empowering loan officers to be the best that they can be, to be entrepreneurs, or a term we've come up with is solopreneurs. And it was really special. And that's where we started, and that's what got us here. And as you know, my father is not with us today, and he was a mentor, a father, a best friend, and made an impact in this industry and this community. And we've come up with an award, and it's called the Impact Award. And he's not here to take this award. Thank you. Well, he's not here to take this award today, unfortunately. But behind every great man is an amazing woman, and that's my mom. This is for you, Mom.
Beautiful. Wow, it's heavy.
It's heavy. All right, well, thank you so much. Without her, we couldn't be here either. So, to be honest with you, I'd like to take a brief moment of silence and just honor my dad and what we're here for. So, if we could do that right now, I'd appreciate it. Thank you. Thank you very much. I know he's here. I know he's here. So, what do we do from here? What do I do? As your president, it's my job to lead our charge, and that's obviously to honor, where we come from, our foundation, which is, built on integrity, transparency, relationships, and, everything that got us here. But there's a lot of things that are probably changing in the landscape of our company and the brokerage, community and the industry. And the last thing we want is to be the next travel agent. So I'm constantly looking for creative ideas. Fintech's a big buzzword, and there's all kinds of stuff around that. But I think at the end of the day, people forget that it takes professionals like yourself to deliver products that people trust. And I don't know about you, but whenever I get on a phone and I'm trying to get some customer service and it's some automated machine, well, how many of you are pressing 0 about 10 times to get to somebody to talk to? And I think that's ultimately what it comes down to, is working with the top in their class like yourself. And that's why we're all here. And that's what brought you to C2. And, our job as a company is to continue to, revise and tune that strategy to continue growing. We're looking to expand across the nation and broaden our reach and, expand our network of top-tier loan officers like yourself and have the opportunity for you to potentially follow your clients as they make moves from California or wherever they may be. There's a lot of stuff going on. There's a lot of equity in homes now. I'm sure that Scott Harms tapped into on that for reverse. But, there's people making moves, and we want to make sure that we can facilitate their needs. And I want to make sure you have the ability to do that. Obviously, it's supporting our staff, our team, that makes us, rock solid in terms of when you have a file closed and a check comes in, compliance is taken care of, that stacking order that nobody likes that we got to do, because compliance is number one. That's what's going to keep us here as a company. And we want to make sure that that's cleared and you guys and gals get paid ASAP. So there's no ifs, ands, or buts about that. And, I think that there's just a lot of creativity that we can have. And this company was built on really a suggestion box. It was things that, as loan officers come across things as you in your business, hey, why doesn't C2 have that? Well, if we don't have it, why don't we? Tell me. Tell Brian, myself, and if it's something that makes sense, absolutely. We'll do that, and or we'll try different things that may be improved. We could beta test some other ideas. So there's different things that I, creatively come up with, or you do, and I open those opinions, those options, that input. So I would like you to bring that to me as well. So with that being said, I think people have come to me and asked me, they know my father passed, a mentor, he was a pioneer in this industry. What can we do for you? What can we do for your family? Well, what you can do is you can continue to make an impact for Ron. And that's every day, and that comes down to every household that you work with, those borrowers. That's the impact and how you carry yourself with the community. And that's all I want. That's all he would want. And your independent success is what his legacy is all about. So with that, I appreciate you. I look forward to an amazing meeting, and let's enjoy ourselves today. Now, Brian.
Thank you, David. How's that sound? Pretty good. Can we ask for a better president who's taken over? What a job. He's David got Ron's charisma, his smarts, and the next 10, 20 years are going to be a great ride. I'm Brian Kent, COO, C2 Financial. I want to mention one thing that maybe got missed. On your table is a little sticker that says RJT. Those are, of course, Ron's initials. If you'd like to honor him by placing the sticker on your lapel, I think that would be really neat. Okay, so I want to cover some things that we did in 2020. Obviously, this is our first in-person meeting, and so we didn't really have a chance to cover those things. We, of course, in 2020 production, were the #1 broker in the entire nation for 2020. Yeah, let's get some applause going. Gee whiz. In 2020, we did over 25,000 loans. And in 2021, we're projected to do almost 28,000 loans. So another round of applause, everybody in this room and across the country for C2. We doubled our office space. We know it's an interesting time to be doubling office space, but we're growing. We're getting bigger. We're getting into more states. We introduced a CSA Award, which I'll talk about in a little bit, Community Service Award. We were fortunate, during the last couple years. Obviously, our industry was busy. Our commissions were healthy. Everybody was happy in our industry, but a lot of people in retail, restaurants, hotel, whatever, that got really hurt. Families got hurt, and C2 donated about $50,000, about $1 per file over the course of the last year. And so that's something to also be proud of. One last little thing we introduced last year was Quick Pay 2. I don't want to get into all the details, but there are 2 lenders on Quick Pay 2. Everyone knows UWM has been on Quick Pay. That's where you don't really have to do anything. The file funds, you upload a commission request, and you get paid. Quick Pay 2 is a modified version of that. It's not quite as easy, but almost as easy. There are 2 lenders that are on it. HomePoint and Orion just got on it. So with those lenders, essentially, you as the originator handle the initial packet, the BSA, the BCA, ECOA, so on and so forth, and they handle everything else. You get the file from them, and you merge those 2 files, and it's almost as easy as Quick Pay 1, not quite, but we've gotten a lot of good feedback on that, and a shout out to Andrea Vasquez and our QC manager who helped put that together. Okay, we all come across quotes from time to time. Some of them stick with us. This is one. I was watching a Netflix series called Alone. Really good. It's sort of a survivalist series reality deal. Really good. But failure is not fatal, but failure to change might be. I think the message is pretty clear. Calyx Point is still around, the Calyx Point product. But the Calyx Point product is built on technology that is probably 30 or 40 years old. I mean, it's almost like you're using a typewriter, in today's world of technology. So we're never going to force anyone to do anything, at least not yet. But the reason Calyx Point still has it around is because people want it. They tried to get rid of it, but originators and processors were so accustomed to it that they said, no, don't get rid of it. It's not the best, but it's what we know, and we're comfortable with it. Okay? So they kept it around for that reason only. But what I think everybody needs to be considering is obviously newer cloud-based systems. Calyx has a system called Path, which we put out in the weekly updates. We're doing demos. It's cloud-based. It works on your phone, on any tablet device, on your laptop, wherever you are in the world. It's secure. It's got upload features, pretty much everything you need. Okay? But it doesn't have to be Path. Arrive is out there, and Arrive is a great product as well. And of course, there's LendingPad too. But I just want to mention this because people are comfortable in what they know. But I'm telling you, the time it takes to originate a loan in Calyx Point is probably 10 times the amount if you were on a different system. And the borrower experience on Calyx Point is probably 10 times worse. So just food for thought. Just real quick, everyone knows a pain point in the industry has been appraisals. 2-3 weeks, appraiser commits, then they bail. We came out a few months ago with something called the Appraiser Accountability Tracking Tool. It's on our website. Basically, what we're asking you to do is if you have a bad experience with an appraiser, report it, and we will go to our panels, our AMCs, and ask them to remove that appraiser. It's got to be legit. This is not the value didn't come in. It's got to be a legit gripe, a legit complaint. So please report those. Okay, everybody knows the hackers are getting better every day. Security is critical. This is one thing that I didn't even know about, but there's something called Patch Tuesday. Had anyone heard about Patch Tuesday? Anyone? I never had heard of it. Apparently, Windows comes out with a patch every Tuesday. Now, in the past, I thought, oh gosh, they're adding some sort of new little feature. I don't need that new feature. I don't need this. I don't need that. So when the little alert came up on my computer that said there's an update for Windows, I would just click snooze, you know, or I'll do it later, something like that. Well, turns out the patch is not some little new feature. The patch is for security reasons. And if you don't have that patch, your system is not secure. So when that alert comes up on Windows, make sure to install it. Everybody knows about the wire scams. Make sure from day one when you're interfacing with your client, you're letting them know, not at the bottom of your email in the signature line that nobody reads, hey, don't wire money to some random account. It's got to be on day one with your clients right up front. Hey, this is important. Do this, don't do this. Phishing. On the C2 Slack channel, I'm always seeing posts, and it's good. If you come across something that looks like phishing, that's an email you get. It looks like it's coming from your Outlook account, looks like it's coming from your Gmail account, and it says, click here, your password has expired. Click here to reset your password. If you click on that, and you enter your user ID and password, now the bad guy has your user ID and password for your real account. So don't click on anything. And forward it to C2 and ask, hey, is this legitimate? Because 9 times out of 10, it's not. Everybody knows, better have a computer password that times out. This is an important one that I didn't really appreciate. If we go into a Starbucks or we're at the airport, we log into Wi-Fi. Why not, right? It's Wi-Fi. Well, you really want to be using a hotspot on your phone. If you don't have a hotspot and you're not paying the $10 a month extra, do it. Get the hotspot, and then when you log into your laptop, you're using your hotspot. Wi-Fi fakes. So we put an announcement out. Sometimes you go into a Starbucks and you go to log into the Wi-Fi, and you see Starbucks One, Starbucks Guest, Starbucks whatever, latte. One of those actually may be a fake Wi-Fi. So when you go to Starbucks or wherever you're at, make sure the Wi-Fi you're logging into is the actual legit. So you got to ask the cashier, whoever it is. Next, secure upload link for borrowers. Everybody knows anything sensitive should never be emailed. Always through a secure link. This is something that also caught me off guard. Our IT guy told us about. The only Windows systems that are secure are 8.1 and 10. If you've got some other older system, your system is not secure. Your borrower's system is subject to be stolen. So make sure. Internet Explorer is not secure. You should never be using Internet Explorer. I'm not going to go through all these, but there's nothing more that I love than going through our website and showing some of the tools. So if after this meeting, find me. I got my laptop. If there's any questions, let me know. We have a signature line generator, for example, where if you want a professional signature line with your photo and all your information, we came out with one of those. And there's lots of different things we've got. I'm going to skip through that. I'm getting close to the end here. I'm on a bit of a mission in terms of email organization and clarity. I get emails sometimes that are rambling, and I have no idea what the question is, and then it turns into a back and forth. So first off, if it's regarding a loan, make sure in the subject line you've got the loan number and the borrower name. That gives me some context, and it'll give your realtors or your clients or lenders, whoever you're dealing with, context. And I want C2 to be known in terms of originators sending emails as having good, clean, simple, clear, organized emails where the recipient knows what the situation is and what's the question that you need help with. A lot of times I'll put in red if I'm asking a question. Here's my question. I'll put that in red. That's what I'm looking for. And when I respond to an email, I'm sure people have seen this a lot, but not a lot of people use it. When I respond, if you ask me 3 questions, I respond in red below each question. Keeps everything very organized. And I think, again, borrowers will appreciate that, realtors, and everybody else. So I'm going to play a little video. This is on our CSA Award. If we could get the lights down, thank you. So the CSA Award is an award called, stands for Community Service Award. Basically, it's something I've wanted to do for a long time. We've got a lot of great borrowers and clients who do a lot of great things in their community, and we wanted to start recognizing some of those borrowers. So I wanted to show this quick video.
Hi, my name is Gary Goldstein. I'm a senior loan officer with C2 Financial Hawaii Division. I'm here today to talk a little bit about our new award for deserving borrowers within our community. And today I happen to have one of our borrowers who won the first award, Schroeder. Right when I saw the criteria for this award, people that do great things within the community, what's going on in the world with this pandemic, I thought, wow, this guy is perfect for this award. With the background of the owner of our company contracting COVID early on and being in the hospital for so long, then surviving it, it just kind of hit close to home. So I thought, hey, he's a perfect candidate for this program.
My name is Schroeder, 31 years old. I'm from Mililani, Hawaii. I live in Kapolei, Hawaii now. I work for the Honolulu Fire Department. I've been in for about 2.5 years now. And I also work at Palimomi Medical Center as a nurse. I love to surf. I love being around the beach. I love being in the sun. I love to travel. COVID-19 isn't helping, but I really feel like traveling opens you up to so many different experiences and makes you appreciate your life a little bit differently.
For Adam winning this award, I mean, I think I was more stoked than he was. It was just seemed, I mean, he was super, super happy and very humble, which made me feel that much better that he wasn't expecting this and he even kind of forgot about it. And for him to win, it was truly just satisfying, I guess I would say. It's just an awesome achievement for me as the loan officer and for sure for him as well.
When I found out that I won the award, I was actually very shocked because I was actually at work and Gary had called me. I thought something was wrong with the loan or needed something and everything like that. And he said, hey, guess what? Like, you won the award. And I was just like, what are you talking about? He said, you won the award. And I was completely, completely stoked, completely mind blown. And I felt really honored with actually getting selected because I'm sure there's a lot of people that are deserving of this type of award. There's a lot of people that do really great things out in the world, out in their own communities. And I'm just a small part in my community. And so for someone to recognize someone of mine, of my service, it's a reflection on also other people that do the same thing that I do, who may not be refinancing or whatever. So it's more of a whole where I see people, many people deserve this.
I think with this type of program, what C2 is doing here, recognizing people in our community, it just shows what a great company that we are, that we're more than just lending money or helping people refinance or purchase homes. I think we're truly do care about our communities. In addition to C2 offering such awards and recognition to our borrowers, it just, me as a loan officer, as an employee for the company, it just makes it much more gratifying knowing that they truly do care about our communities, our local communities where we live and work in. It just makes my job that much more fulfilling.
To see that during this pandemic and the communities and the world are kind of, banding together, really help support healthcare workers, first responders, and also frontline workers, just making sure that we can try to have as much of a normal life that we can try to do and try to beat this as a whole and try to unite together to get past this long pandemic.
So if we could get the lights up. That was just a quick video on Gary and Hawaii and awarding that. So be on the lookout. Be on the lookout for borrowers or clients that you have who might qualify, somebody doing something good in the community. I am going to pass the microphone to Renee in Cal State, our real estate division. Thank you.
Good morning, everybody. I'm so happy to be back here in front of all of you. What a crazy year it's been, right? Hi. Let's see. So I think we have quite a few prospects in the audience, so I just want to let you know, like Brian said, I'm Renee with Cal State, the real estate division of C2. Anytime anyone comes on with C2 as a California licensed agent, you also have the opportunity to do real estate. Cal State, same broker, same DRE license number. There's no shuffling of licenses or anything. Right when you come on board with C2, you have the opportunity to do real estate here in California. Like David mentioned and Jay mentioned, our goal here at C2 really is to help you diversify your business, give you opportunities to grow your business, give you different avenues to do so. We have our reverse division, we have our real estate division, we have our commercial division. So our success is based on your success. So we want to give you the tools to be able to grow your business. Just a quick snapshot of our 2020 achievements. I'll kind of let the left side speak for itself. What I really wanted to point out to everybody is 99.9% of the agents that do real estate are loan officers. And there is a snapshot on the right side of kind of, to put it in perspective as far as production. Our top agent did 52 deals. And that's 52 deals out of our 200. So I really want to challenge you. Let's share the wealth. Let's have other people in this room start doing some real estate. Because we have one person that kind of dominates. He did 52 real estate deals and 111 loans. So that just shows you it is possible to be able to do it, and he did it in this crazy, crazy market. And then our other top two, we did 16 real estate deals, 66 loans, and our third producer there. So it is possible to kind of do it all. I know a lot of you were knee-deep in refis this year. So you didn't have the chance to kind of even have a new opportunity on your radar. But I encourage you to think about it. Now we're going to be looking into getting some more purchase business, and we're going to be, looking at kind of a different market. One thing I wanted to bring up that I think everyone in this room can find valuable is, I know, like I said, you were all knee-deep in refis, but I'm sure you saw your fair share of purchases and the crazy tactics with these market conditions, what it took to get a deal accepted. So I reached out to one of our top producers. She's actually sitting right here. She did loans. She did her fair share of purchases and listings. So I reached out to her and I said, what were the couple things that stood out to you, either on the buyer side and the listing side, that helped you either pick the offer that got accepted or that why your offers got accepted all over the other one. So I'm going to read this so I don't miss anything, because she gave some really valuable information. And like I said, everyone in this room can use this kind of as a little good tidbit. She said, from the standpoint of a listing agent and a buyer's agent, it's good idea to include the loan officer in the email when you submit the offer. The loan officer needs to make contact right away. Don't wait for the phone call. If it looks like the loan officer is proactive and communicative, it seems to put the listing agent at ease. That's actually why I choose the offers that I do half the time. The loan officer should be 100% ready to cross-qual. As a listing agent, I have found that if I'm getting everything up front and I know they're willing to cross-qualify, it makes it an easier process. And on the buyer side, so when she submits offers, she makes sure to send them everything. And what I mean is just not just sending the automated underwriter approval, but proof of funds, and not just enough to cover the down payment, but make sure it's enough to cover the closing cost. A good realtor understands that just covering the down payment isn't all the money that's needed to close. Make sure to provide a pre-qual letter with all the loan officer's contact information. She said you wouldn't believe how many pre-approval letters she gets that doesn't have the right contact information. The reason I bring that up is because the loan officer is an incredibly important piece of the puzzle, but now more than ever, when a listing agent is getting 20 to 30 offers, that loan officer becomes an absolute imperative part of getting the offer accepted. Being able to have that upfront email, having your information up front, the realtor the realtor loan officer relationship is becoming even more important on that front end because the listing agents need to see things that stand out. It may seem like common sense, but these little things add up, and that relationship with loan officers and realtors is going to be imperative sometimes in getting that offer accepted. I think last but certainly not least, I have invited one of your fellow C2 loan officers to come up. This is Miss Kelly Rickletts. So Kelly took actually a 20-year break from doing real estate. She's been at the company a long time. She took a 20-year break, and I think it just kind of, real estate just kind of happened to fall in her lap. So I've asked her to answer a couple questions. Yeah. Just so you guys can see how she's kind of put real estate back in her business and how she's become successful doing so. So first, I'm just going to ask you, is real estate a big part of your business now?
Absolutely.
How did you get started in getting back into real estate?
I think it was 19, I had a client that called me, or a friend, and knew that I did real estate and loans back in the day. And she was buying $1 million house, and she said, I only want you to help me. So I said, oh, time to get back into that. The good news is doing the loans and qualifying, know that she was ready to go.
What do you think's the most beneficial part of being able to do both?
That you have full control. And you are processing the whole thing. I mean, you talk to that listing agent, as this agent says, it's very important that you have everything up front and know that they're qualified. And when I'm the listing agent, I can pre-qualify the buyers that bring the offers in. So it really helps.
I think Kelly closed, I think 2 of her 3 purchases. She also did the loan, and I think one was like $1 million. Yeah. So to me, it's a no-brainer. They go in hand, but I want you to hear from someone that's in it daily, because I know for some people it's a far-fetched idea. And this, I think a big concern is how does it affect your realtor partners or realtor relationships?
It has not. A few of my realtors know that I do real estate for friends and family and referrals only. And I mean, I don't go out and like reach to their clients, and they know I would never, if I'm doing a loan, say, oh, why don't you, buy it through me? I would never do that. And then some of them don't know, and I don't advertise it, really.
Yeah, that was my other question, advertising.
Yeah, I don't advertise that I do real estate. It's just really friends and family and referrals from C2, and thank you all.
Yeah, I've referred, Kelly's one of the only people doing real estate in Orange County, so when people call me and they're like, Renee, I need an agent in Orange County, I've sent her a couple that have worked out, some that haven't. But I also, referrals are a big thing. I don't know, if you need an agent, make sure to call me. We have plenty here in San Diego, plenty in Riverside. I like to be able to keep it in-house and be able to pay you that 25% referral fee. Let's see, video advertise. I think that's really it.
I think that's it. Thank you, Renee.
Thank you,
Kelly.
Kelly.
And Renee is fabulous.
Oh yeah, Kelly and I, we work together on every single deal. We talk about it. I'm here to help you guys make the transaction seamless.
I think that's really important, especially when you work by yourself and you hadn't been back in that part of the business in a while. She's awesome. She knows the right forms, everything to do.
Thank you. So real quickly, here's just a couple things to get started. I mean, it's very, very simple. There's a couple page contract to your C2 contract, couple page addendum. Join your local board of realtors. They're really there to, you get car access, NAR access, MLS access. It's like $1,000 a year, but that pays for itself obviously tenfold when you close one deal. Like I mentioned, referrals. And with that, let me just give you my contact information. I'll be here all afternoon. I know that Ricky and Kelly and a couple other my agents here that do both would love to answer any questions on kind of how they make it work and how, they deal with the realtor relationships and all of that good stuff and answer any questions. And just thank you all for your hard work in this crazy time. I really appreciate it. Let's continue to make an impact and make Ron proud. And with that, I'm going to hand it over to Mr. Scott Harms of our reverse mortgage division.
Thank you, Renee. Glad to be with you all live for the first time in a year and a half, 2 years. So thanks for being here. And Big on collaboration, so during the breaks, meet your table mates, your fellow attendees, your vendors, and your lenders. So nice to be with you all. Renee just told you all about the real estate opportunity at C2. I'm here to tell you about the reverse opportunity that awaits you. There we go. We'll get it. So, recognizing the reverse opportunity. Clicker works better on this side. Okay, reverse for FHA, which is for values up to about $1 million, borrowers have to be 62 or older. For jumbo reverse, which is values over $1 million, the age of the youngest borrower can be down to 55. That's a big deal. That's new. Up until about 2 weeks ago, the youngest borrower had to be 60. So that encompasses a whole new range of borrowers and cures what we know in the industry is what we call the non-borrowing spouse challenge in many cases. So 55 and up for loans, values $1 million and more. Senior-friendly qualifying. This is very important for you traditional forward loan originators. Very easy to qualify for a reverse compared to a traditional mortgage. So as soon as you hit some qualifying issues, give me a call. We'll help you turn that into a transaction for your borrower. No principal and interest payments due. They still have to pay their property taxes, homeowners insurance, and HOA fees, but no principal and interest payments. Has no term. It's for the life or when the homeowner leaves for more than a year, and there is a term, but it's 50 years after the youngest borrower's 100th birthday. Good luck. It has no prepayment penalty. And unlike a HELOC, there's no balloon payment or fully amortized payment after the first 10 years. There is nobody over 55 that should be getting a HELOC. Flexible access to home equity. It's a lump sum, monthly payment, line of credit, or a combo. It's about 50% minimum equity required, and think about that. That's less than the appreciation we've seen in the last 10 years. So virtually every senior homeowner that has not done a cash out refi in the last 10 years has enough equity for a reverse mortgage. That's important because, 2010, 11, 12, a lot of the challenges we faced were motivated borrowers that didn't have enough equity. Now they all have enough equity. Lender paid comp from 4 to 8 points. That's also a key. These loans stay on the investor's books for a long time, so very high lender paid comp, and especially on the jumbo, we can close them for less than $700 cost to the borrower. So think to yourself, any borrower who's over 55, would that borrower benefit more from a reverse mortgage? Okay, we are in the perfect reverse market update. The first reason, the pandemic effect. Nobody wants to go to a nursing home or senior group living. And the kids of our borrowers don't want them to go to a nursing home or senior group living. That's important because reverse mortgage is used to finance aging in place. C2 Reverse was virtually prepared when the lockdown hit. We do a lot of virtual client interaction, and if you get involved with the reverse division, we'll teach you how to do that. It will make you much more efficient in your business, increase your conversion rate, increase your service to your clients, and your income. Baby boomer effect. Really, this is another reason why we have the perfect reverse market right now. Baby boomers are becoming the primary demographic for reverse, and they're much less reticent for carrying income into retirement than their parents were or grandparents were. Appreciation effect. This is something that's affecting everybody in this room. Home values have more than doubled in the last 10 years, again, giving virtually every senior enough equity for a reverse. And in fact, we've seen as much as 25% appreciation in the last year in some markets, including the one we're in, Del Mar. I have a number of clients I did a jumbo for 13, 14 months ago. We're refining them now for either lower their rate or big cash out. So all the reverse originators in the room, be sure you're contacting your clients you did 12 months or more ago, because if you aren't, your competition is. Okay, the interest rate market effect. With FHA HECMs, the lower the rates, the more money they can borrow. These historically low rates are really increasing the amount of loan amounts we can provide. And lower rates also slow the reverse amortization. Easier sale, especially when you're dealing with financial advisors. So we have a new Blue Door webinar series. It's debuting October 4th on the Monday Blue Door webinars at 10 a.m. and it is open to all C2 loan officers. So watch the weekly newsletter. We'll be putting information out in that and links for it. It's the Tom Dixon training series. Tom Dixon's a nationally known trainer. It's an effective plan and process for marketing to financial planners. Now this program will also work for realtors. It's targeting the right type of financial planner or realtor, delivering the right message, managing the right sales steps, and you will learn a well-defined sales process for creating reliable and repeatable success in building and maintaining these profitable referral relationships. And again, it applies to realtor relationships also. Update on C2 Reverse. C2 Reverse is the largest broker in the country for jumbo reverse. Think about the markets we're in. We're continually setting new records for C2 Reverse closings month by month. We now have 180 plus C2 loan officers that are C2 Reverse certified. C2 has more CRMPs than any other company in the country, and that's very important. CRMP is a Certified Reverse Mortgage Professional, highest designation in the industry. Very tough to attain, and we have a bunch in the room sitting right here, so congratulations to our CRMPs. The C2 Reverse Training Certification Origination Program is nationally recognized by the Reverse Industry Press and by the National Reverse Mortgage Lenders Association. So there are 2 courses to get C2 Reverse certified, and then a certification exam. And then once you're C2 Reverse certified, we teach you how to take that expertise and how to market reverse to your existing sphere of influence. And you all have a gigantic sphere of influence, given your experience in the mortgage business. Then C2 Reverse 401 is now that you have the prospects from marketing to your sphere of influence, how do you convert them into being an applicant? We teach you that in 401. Then virtual client interaction training, access to Blue Door portal, which is our online toolbox and webinars, and CRMP training program and support for achieving the designation. Once you have 3 years experience in reverse, you're eligible for CRMP. We'll help you get that designation, which truly is a career-changing and life-changing achievement. And all our training is online, on-demand, self-paced, self-study, and at no cost to C2 loan officers. So income opportunities await you in reverse. Everyone you know knows someone whose senior years would benefit from a reverse mortgage. So you have 3 ways to generate income in reverse. Come C2 Reverse certified. If you'd like to do that, talk to Elaine Googe, sit in the back of the room, sit in the center here, or me. We'll get you set up. Or you can refer a loan or work with a mentor. Don't ever let a reverse pass you by. You want to recognize that opportunity because there are huge opportunities you are hitting every single day. To make an active or handoff referral, go to the C2 corporate website, go to the reverse landing page, and just click the big orange button. Click here, options for your reverse mortgage prospects. We'll take care of them like family, and we'll get you paid. If you want to brainstorm a lead or refer a contact, contact me anytime. I am here to help you serve your senior clients and to generate money in reverse. To become C2 Reverse certified, contact Elaine Googe, C2 Reverse Division Admin, agooge at c2reverse.com, and all of our contact info is on the C2 Reverse landing page on the corporate website. So help us help you serve your senior clients and generate income in reverse. Really glad to be here with you today. Be here all day. Love to answer any questions. Thank you. I'd like to introduce, thank you. I'd like to introduce Brandon from the C2 commercial.
Thank you, Scott. Thank you all so much. It's exciting to be here today. If you've been to a C2 quarterly meeting before, you're probably thinking, C2 commercial, well, that's not David Temko. Well, as you can see, even though David and I are just about the same height, I am not David Temko. My name is Brandon Landau, and I've spent the last year uniting myself under what David's built at C2 Commercial. It's been an honor to work with David and oversee the commercial division together. I know I've spoken with many of you over the phone or connected via email, but I'm excited to be here today in person and meet each of you. I'll be here all afternoon. What do we do when we don't know what we're doing and we need some guidance? Well, for the most part, maybe some of us, we take a stab at it anyways, but for the most part, we'll go find an expert, or we'll ask a colleague or a friend or for a referral. Well, we can think about commercial the same way. I mean, I can't stand up here and teach you how to be an expert at commercial lending in the next 5 minutes, but I can teach you how to be an expert at referring your clients to C2 Commercial. It's super easy. Think about it. Do you have a client that's maybe a business owner, or you're seeing commercial opportunities on your client's Schedule E's on their tax returns? Whatever it may be, maybe they're looking to diversify their investment portfolio. You don't have to shy away from talking about commercial opportunities just because you're not an expert. You don't need to be. You have an expert at C2, a specialist who can back you up and be your support for commercial. It's super easy. All you have to do is go to c2commercial.com and submit a loan inquiry through our website. All the information will come to me. I'll reach out to you. We'll discuss the opportunity. I'll connect with the client from there, and we'll run with it and take it all the way to the finish line. All you have to do is wait for your referral fee to hit your bank account. And yes, we do pay referral fees. Here's my contact information. Everyone take out their phones, pull up your camera, aim it at the QR code, or just snap a photo of my contact information. And I just want to say while you're doing that, David has taught me how to navigate any scenario in commercial, no matter the situation. Commercial lending can definitely be difficult, but it doesn't have to be for you, and we're here to make it as easy as possible. We take a very hands-on approach in our system, in our division here. We take a client-centric approach. So we're not just handing your client off to the lender and walking away. We center ourselves with the client every step of the way throughout the entire process and advocate on their behalf. We can handle any property type, commercial, any 5 units and up, car washes, triple net lease, gas stations, residential care facilities, office buildings, you name it, we've seen it, and we can handle it. Just want to leave you with one thing. So, what's the downside? What's the downside to not referring your clients to C2 Commercial? Well, it could be the last time you talk to that client. The last thing you want them to do is go to another broker for their commercial needs. The Bank of Americas, the Wells Fargos, they're going to sell them commercial, they're going to sell them insurance, and you may not ever hear from your client again. So let's keep your clients at C2, and let's keep them happy. And I will be here all day, and I look forward to meeting each of you. Thank you so much.
Thank you, Brandon. And thank you to all of our C2 Financial Division managers. Now, think about this. This is the opportunity that C2 Financial is trying to provide you. If you're looking at C2 Financial, if you're new to C2 Financial, think about all of these opportunities. So you don't have to be an expert in commercial, like Brandon was saying. You don't have to be an expert in reverse mortgage loans, like Scott was saying. You don't have to be an expert in doing real estate. But the options are there for you. The opportunities are there for you to be a more rounded service provider for your clients in this industry. This is why you're C2 Financial. So with that, I'm going to move on to awards. So in 2020, we didn't have an in-person meeting, so we weren't able to give out the awards in person. I'd like to go ahead and take this time to recognize some of the great producers that we have at C2 Financial for some well-deserved recognition. So this is a few of our top 2020 award winners. Now think about this. C2 Financial has a little bit over 900 loan originators. 900 loan originators. Now, doing an average of, a couple of loans a month, 5, 8, 10, 15. But these folks here are the cream of the crop. When I mention your name, please do me a favor and stand up and stay standing for a little while for some well-deserved recognition. So, with that said, number 8, company-wide. Number 8, company-wide in production is Mr. Dan Keys. Dan? Number 7, company-wide at C2 Financial, David Sider. David? Number 3, company-wide at C2 Financial, the number 3 loan production person at C2 Financial, Joseph Chaco. Joseph? Number 2 in the entire company in terms of volume, loan volume, Jody Ryder. Jody? There she is. There she is. And the number 1 mortgage loan originator in volume for all of C2 Financial with $179,431,396 in closed loans for 2020. I got that number down. Jealous, yeah. The number 1 producer at C2 Financial, Geraldine Shaw. Geraldine? All right. Congratulations. Please stay standing for just a little bit because there's some other folks that are here today that I would like to recognize. So, the top producer that we have here in Northern California, a top producer in Northern California, it's such a tough market, Richard Wong. Richard, please stand up. Top producer in Colorado, our top producer in Colorado, one of our top producers company-wide, Allison Thinhouse. Allison. Top producer in Arizona, our top producer in Arizona, Scott Dusenberry. Scott, congratulations. Our top producer in all of Nevada, Leo Vexlin. Leo, please stand. Congratulations to you all. Thank you very much. Please keep standing for just one more minute because I want to tell you something. There's a couple of people chasing you guys. So in 2021, year to date, this is now 2021, year to date, these are the folks that are setting the bar at C2 Financial. So I'd like the following to stand. Moose Mao. Enzo Morales. Enzo. Todd Swanson. Todd. Shelly Heimer. Shelly, you still here? Miguel Carusco. Miguel. Somebody that came here not that long ago is already at that top echelon. Jay Palanswamy. Jay. And then there's one other person I'd like to recognize. He's new to C2 Financial as well. Been here a little bit less than a year, and he is absolutely killing it. Kevin Gutman out of Colorado. Kevin, please, thank you very much. All right, again, a big round of applause for everybody here. Thank you very much for all your time, your hard work, your effort, your dedication to C2 Financial. I appreciate it. All right, moving on. Our main sponsor for today is Scott Mccarthy with Loan Depot Wholesale. Scott, we appreciate you being the main sponsor. Please come on up. It is your time. Thank you, Scott.
Well, good morning, C2. It's a pleasure being here today. I've met a lot of you by email, text, and phone, but very few of you face-to-face. So before the end of the day, please come by to my little booth over there or meet outside. I'd love to meet with all of you and say hi. So I'm Scott. I've been in the industry a little while. I want to share a quick little story. About a year and a half ago, I got a phone call from a very dear friend that I've been working with for a number of years in the industry. And we've always been in touch over a couple months at a time. We talk about family, we talk about work. But on this particular phone call, it was a little different. And it started with him saying, listen, I'm retiring from the industry. I said, really? And he said, yeah, and I would like you to interview for my job. I think you'd be a good match. Well, that phone call was with Ken Litton. So for those of you that have worked with Kenny in the past, he's a very dear friend. I'm honored to be part of Loan Depot, and particularly working with so many of you here out in the office. So thank you very much. So finally, I'd like to keep things a little bit on the light side, and I need your help. I need a little participation for this team building event. So if you don't mind, I'm kind of dividing the room right in half with the podium, and we've got Team C over here, and we have Team 2 over here. And I need 3 or 4 volunteers from Team C and Team 2 to come up on stage. Could I get some love? Stretch your legs, come on up. Come on up. Oh, Mr. Sider, thank you. Come on up. I need 3 people. Bring 5.
Come on, Moose. Get up here.
If it makes it a little bit easier, we're going to be doing a little modified version of Family Feud.
Family Feud. I don't know that show.
All right. So we have Team C. We have Team 2. Thank you for the 3 of you. I'm going to start with Team C. What's your name?
Sergio Lujan.
Sergio, very nice to meet you. And?
David.
David? Mm-hmm. Nice to meet you. Thank you very much for participating. So you are the guinea pigs. You get question number 1. It's on the screen behind you. Does LDW accept transferred appraisals? You can talk amongst yourself. Any of you guys can participate. You don't have to stand up, but
Answer?
answer.
Yes. Yes.
Oh my God, they got it right. Good job, guys. You're ahead 1-0. And please keep in mind that we'll also do transferred appraisals on jumbo loans. All right, Mr. Sider.
All right, Scott.
Good to see you.
Good to see you, man.
And congratulations. Congratulations on all the award winners. All right, guys, your question is, and you can see the screen, approximately 62% of all homeowners have untapped equity totaling X amount combined.
Well, I know exactly how to get the answer.
No phones, please.
No, you call your account executive, and if they don't know the answer to that right off the top, but what, approximately 61.
All right, let me give you a little tip. Keep it within $500 billion, and you're going to win it. And again, class participation from Team 2. Any idea? This is on a national level.
No, it's trillions. It's gonna be
That's close.
It's like 2 trillion. I would have said, but
What'd you say?
$1.5 trillion. So he's saying $1.5 trillion.
What'd you say?
Trillion. I thought it was lots of trillions, so I don't know.
Did you? But didn't you say 2 trillion?
I did it. I did blurt that word out.
Darn, he's good. You guys, you won it. It's 1-1. All right, just a few more important questions, guys. All right, you ready?
Yes, sir.
How many 95% LTV programs do we have at LD? Your answer is correct if you get it within 1. Can anyone help? It's greater than 2. What do you think?
3.
And good try, guys. We do offer 5, 3 of which do not have income limits. So it's still 1-1. All right. What's your name?
Angela. Well, it's Mary Angela, but Angela's easier.
Nice to meet you, Angela. Okay, next question is for you. There we go. How many months does an all-cash buyer have to refinance when using delayed financing guidelines?
6 months. 6 months. 6 months.
Congratulations. Uh-oh, guys. We're playing a little catch-up. Yes, sir. All right, here we go. What is the term used when a borrower pays down their loan amount by a minimum of $30,000 and LG adjusts the payment and amortization?
Recasting.
I'll give it to you. Good job, guys. All right, 3-2. We have just a couple left.
I have a question on that. Is there a fee for doing the recast at Loan Depot? Is there a fee that is servicing charges for doing the recast?
Anyone?
What's that? 250?
250 is correct. You should add that person up here on stage with you.
And what about origination?
No.
No origination. All right. Okay, Bob.
It's their turn next.
LD offers a to-be-determined program. I'm going to change this up a little bit. Which program is not eligible on a to-be-determined?
HELOC.
You guys want to talk? Share?
Okay. Jumbo.
Jumbo is right. My gosh. All right, last question. All right, guys. As of June of 2021, what was the median resale home price in California? This is a good one. The correct answer is within 100,000.
So all of California.
What was that? Oh, I like that answer. David?
550.
Oh.
So I get to keep the $800?
Okay, congratulations. This is the very last question. If you guys get it right, you win. If you get it wrong, you don't win. What is the name of our portal?
Mellow.
Well, that was a no-brainer. Congratulations. You guys win. Thank you very, very much. It's an honor to be here, and I'm looking forward to meeting all of you. Thank you.
Thank you, Scott. Appreciate it. Thank you, Loan Depot, for being our main sponsor today. All right, next, with no further ado, I would like to introduce a very special speaker, a titan of this industry. I'm saying that to embarrass the hell out of him if I can. But in fact, you'll find out what a giant of the industry he is. Next up, we have Desmond Smith, Executive Vice President and Chief Growth Officer of UWM. Desmond, thank you for joining us.
Thank you, Jay. First, let me say it's a pleasure to be here to talk to the best in the industry. You guys are our #1 client, so we are very, very, very thankful for you. I'm going to spend 7-8 minutes and then turn it over to the people from UWM who really know what they're talking about, Justin Glass and Danny Marogi. But my story is a little bit interesting. Maybe you resonate a little bit. I've been with UWM for 6 months. And a lot of people like to talk about what I've done because I was never in the wholesale or was never bought into it, never thought it was good, didn't understand what you guys did. And I'll share a little bit why you'll get it, and then I'll tell you why I chose and give you a little bit of thoughts on being in the mortgage business for 30 years. I spent 10 years at Wells Fargo, always in retail. I spent 5 years at JP Morgan Chase. I ran all retail for JP Morgan Chase, distributed and centralized. And I ran all the mortgage business for the bank, for Citibank, for 5.5 years. People who do know me from Fannie Mae. I joined or left Fannie and went to UWM in March. I was the chief customer officer, or some people like to say the second most powerful guy at Fannie Mae for single family. So I had pricing power, I had credit variances, I had the ability to make things happen, at least in theory. And, I didn't go there to stay. So I wasn't a bureaucrat. I didn't go there to try and, change the world by being at Fannie Mae. I went there to learn a little bit more about things like capital markets, servicing, board work. And then it's time to go. So when it's time to go, for me, I had a couple of opportunities. And I put 4 up here, but really there's probably 5. The first one starts with a guy named Matt Ishbia, who everybody in this room knows. A lot of you met him personally. If not, you've seen his videos or you've seen him on TV. But I will tell you this, from the job I had at Fannie, he is by far the most passionate, driven CEO in the mortgage business, 100%. He knows in his soul that the best place for a consumer to get a loan is through a C2 loan officer. That's 100%. He will never stop innovating. We will never stop giving tools. We will never stop challenging everything that has been the standard of the mortgage industry. And so when you meet this man, a lot of you do know him or have seen him, the passion comes out, and I'm like, can this really be real? I'm like, and he's like, how can you have always been in retail? You don't know what you're talking about. You know how he is, right? I'm like, no, I think you're crazy. But the reality is he wasn't, because what you do is faster, it's cheaper by both interest rate and costs than any other lender can provide. That is fact. I learned that at Fannie Mae because I get to see everything. Well, I got to see everything at Fannie Mae. What the average interest rate charge, average credit profile, average costs, and you do it better than any other lender. Again, that's fact. So you put that on top of UWM's commitment to service. There is no other lender in America, this is facts again, anybody can challenge it, I'm happy to give you data, that can consistently close loans in 2 weeks or less. I was sitting at dinner last night, and the gentleman told me, he goes, I consistently close refis with you guys in 8 days. Okay? UWM has built a service model that is second to none. Now, listen, I'm telling you, somebody go, oh, I closed a loan with this lender in 7 days. Somebody died, folks, okay? People working 24 hours a day, pushing through to get that loan through, right? But that's the reality. It did happen, but I'm talking about consistent. So our service, technology, we have 1,300 people who do nothing else but support you. 1,300. I mean, you could add probably the top 20 mortgage companies up from number 6 to number 25. They don't have 1,300 people in technology. Products, before you used to think of wholesale, would think, oh, it's Fannie Mae, Freddie Mac, FHA. Now you have a jumbo product to compete with any bank, right? Retained or released. You have manufactured housing. 2 weeks ago, we rolled out non-warrantable condos, and I already said he will not stop. So if there's a product or a program that you need that makes sense for you, the consumer, us, higher FICO scores, we're going to make it happen. And the last piece I'd say here is marketing, right? One of the things I used to always sell in retail was, oh, you come to us, we'll put your customers in our portal, and we'll send them out the postcards and stuff. What we've built in Brand 360 is the best marketing tool I've seen in terms of brand builder, in terms of the social media piece. You just set it and forget about it, and we'll do the social media post for you. So when I look at all those different things, it was obvious to me, and I put one last one. Look, I work for all those big banks you saw. I work for Fannie Mae. I want to have some fun, right? And so the reality is, come here, get to come out and see you and hang out with David and Brian and team. That's a little bit different than what I typically have done. I'm going to wrap this up with something that people always say, you've been around for a long time. I used to think that was kind of bad, but I'm like, oh, I'll take it as wise, right? I'm not old, I'm wise. I'll share with you quickly the things I've learned after being in the mortgage business for 30 years. First, I'd say hearing versus listening. I mean, I've run sales almost my entire life, or was in sales. And people go, oh, you're trying to be funny. What do you mean by that? I go, well, I'll give you an example. When you get in your car, you turn the radio on, you're hearing the music. You hear the sound, you hear the beat, but are you listening to the words? Most of us don't listen to the words. And I say, when we're talking to our customers, most of us, not all, are so focused on what we want to say to them that we're not listening to what they want to say to us. So if we stop for a minute and focus on what the customer is saying, they tell us exactly what they want. I repeat that back to them and go, oh, he gets it. Well, maybe I get it, but I told you what you wanted, what you told me, and you're like, okay, I got it, right? So hearing versus listening is important. Always doing what you say you're going to do. This is, some may argue, this is probably the most important thing. Because if you can't do it, don't say it, right? You just basically created your own problem by saying something that you didn't know you could do or you weren't sure you could versus just being quiet. I give an example. When I ran Citi, I was talking to processors, and it had a real-life example of a processor who had told the loan officer, I'd call you back before the end of the day. Now, if you know human nature well, the minute someone doesn't do what they say they're going to do, we automatically assume it's bad. 100%, it's bad. Why didn't they call me back? I can't believe it. Loan's not going to get approved. This is a disaster. Reality in this case was the lady's son had got sick and she needed to leave early. And here's what I said to her. You have a cell phone? She goes, yes. I said, I'm sorry your son got sick. You could have called him in the car and said, I have to go pick up my son. I know I said I'd get back to you. I am doing that, but I'll call you back in the morning with the answer. So the power of us, at least not saying something we can't do, and if we do say it, you may not have the answer, but you did say you'd call back. Call back. It gives a little bit more of calm than I'm worrying that something really went wrong. 4 quick traits of successful people. First, empathy. I mean, can you relate to another person? It's that simple, right? Can you relate to someone else? You don't have to say, I understand what you're going through. Maybe you do, maybe you don't. But just being able to say, you're going through something or this is difficult for you, I can relate to it. It's the difference in the world of someone who actually cares about others. Humility, humbleness. You know, if you're a great dad, great soccer player, great loan officer, difference here is when other people say it about you versus you having to tell others, I'm the greatest in the world. Well, really? But when other people say about you, that's humble, that's humility. Curiosity, as you get older, especially like me, you can't ever stop asking questions, can't ever stop learning, right? The minute you stop asking why or what this happened, not from being, just to be difficult, like, look, I'm just trying to understand why this is going on. Curiosity is extremely important. And then the last one, fearlessness, can't be afraid. Can't be nothing, no one ever achieves their full potential if they're afraid to take action. I read something a couple weeks ago that I thought was interesting and tied to this. Do you know how many times when a kid is trying to learn to walk, they fall? 50. On the 40th, the kid doesn't go, that hurts, I'm going to stop doing it. Right? They keep going. So that fearlessness to keep pushing forward. 2 last things. Always play to win or don't play at all. The guy I work for, Matt Ishbia, is probably the guy who epitomizes it to me. When he did All In Play earlier this year in March, no one knew how this was going to play out, right? He didn't know. I mean, he was 90%, I'd say, sure it was the right thing to do. But he's fearless, right? He's going to do what he believes is right. And he believed in his soul that the best place to get a mortgage for a consumer is with you, the mortgage broker, right? C2. And a couple of other lenders weren't really supporting that. So he's like, I'm doubling down. I'm going all in. And we didn't know. But I'll tell you how it worked out. In August, we had our greatest month ever. We funded $22.9 billion in the month of August because of what C2 and folks like you do. So got to always play to win. And the last thing is kind of funny, and I'll wrap this up and turn it over to Justin. The problem, the opportunity is always you. I had a professor in Boston, I went to school in Boston, and he said, I'm going to teach all you kids what's the answer to all your problems if you still have them, right? And, we're kids, and we're like, what can this, how does this guy know? We have no idea what he's talking about. He goes, go home, I want you to think about it. When you come back tomorrow, the answer will be on your desk. So we all come back in, and as you're walking, he goes, do not open the folder until I tell you. And on the desk was a manila folder. So we all go in, we sit down, and he goes, so I'm going to tell you the answer to all life's problems. The question is how you deal with this. So now we're like, what? You open the folder, and in the folder's a mirror. And you think about that for a minute. He goes, no matter what happens to you in life, it's how you take action or you don't that will be the difference in being a victim or creating a different path. Thank you very much. I'm going to turn it over to Justin Glass.
Thank you, Desmond. All right, I'm going to jump into this real quick here. Human and technology. So over the past few years, our industry has had rapid movement as far as technology is concerned, right? It's the #1 thing that has been impacting the consumer experience as well as your efficiencies. But when I talk to loan officers, the biggest thing they're afraid of is being replaced by technology. And Brian talked about it earlier today. And when he talked about it earlier today, he was talking about adopting new technology. And you have to adopt that technology to stay relevant. Technology isn't going to replace the human aspect of what you guys do. You are there to guide every single borrower through what's almost always the largest transaction of their life. They need your guidance. But for you to, again, remain relevant and to be able to produce more and be more efficient and provide a better consumer experience, you have to be the one that powers that technology. And one of the ways you can do that is with marketing. I want you to think about this. Every email you send, every text message you send, every phone call you have, every social post you do is marketing. Every time you are interacting with a consumer, that is marketing. It doesn't have to be a big bang video or a flyer or a mailer to be called marketing. Every interaction you take is really what you're doing to put your brand out there to the consumers you're looking to work with. I want you guys to look at this. Since February of 2020, social media spending's up 74%. How many of you are taking advantage of social media, whether it be paid social media or free, right? You can do various different types of social media marketing. It doesn't always have to cost money. So what I would say is if you're not doing social media today, start doing it today. This is the thing you can take home with you, walk away, go on your Facebook account, start marketing to your consumers, to your network. The power of social media is exponential. If you can get, if you have 600, users within your group and one of them shares it to their group and maybe they have 600 users, you just reached 1,200 people. Another one shares it, right? It is exponential as far as the reach can go when you talk about doing your marketing on social. I also want you to look at this. Where are your clients? Where are clients in general following the brands that they like to do business with? And right now, that is social. Social is the main avenue for where consumers are looking to see what's going on with who they're doing business with. You have to be present. You have to know who your clients are. This is the future. And video content. Are you taking advantage of the tools available to you? I know I'm going to talk about a partner perk later on, BombBomb Video. You can do 30-second videos, 45-second videos, shoot them out to your borrowers. One of the best ways to do that if you're not comfortable just kind of selling yourself on a video is to use a tool, again, like BombBomb, to be able to take a screenshot or a video of the loan estimate with your face in the corner, walking that borrower through that loan estimate. You're going to have to do it on the phone anyway, right? You're going to have to do it either on the phone or in person. Why not shoot a video that, again, takes maybe 2 minutes or less to walk them through that document, but it also creates that personal touch with you. They're now seeing your face. They're getting familiar with you as their trusted advisor. So what I want to challenge you is, what have you done in the last 12 months to change your marketing practices? And if you've done nothing, then it starts today. Today is the day that you need to change. Because I'm telling you, the bigger banks, the very highly successful mortgage brokers, they are on social. They are putting themselves out there in the market in a much different way than ever before. You need to adopt this and take advantage of it now. All right. Talk about creating an experience. Everything a borrower looks for is an experience. It's not just about the price. It's not just about that rate. They want to work with someone that's going to make things easy for them. One of the things we've put out there, which you're all familiar with, I hope, is one-click AUS. But when we talk about combining one-click AUS with easy findings, you now have this powerful tool to get, ideally, a one-touch CTC. I know it's not completely realistic, but imagine if it was a two-touch CTC, right? If you are running one-click AUS, you are able to find the best possible loan for your borrower. It puts a side-by-side comparison of exactly what is required for that loan. So if you think about, I always use the example of business tax returns. If you're doing someone that's self-employed, Fannie Mae, 2 years of tax returns. Freddie Mac, typically 1 year is all that you need. Well, what are you going to do to make your borrower's experience better? Go with Freddie Mac. They only need to get 1 year tax returns. Makes it a lot easier for them and for you and for UWM to even underwrite that file because we don't have to sift through 2 years of those returns. You combine that again with easy findings, that's going to tell you everything that you need to collect for that loan before you even send that into the doors of UWM. Pro rankings. So when you talk about pro rankings, it's really all about your touches and all about the tools. If you want to create a good borrower experience, you can do that with fast turn times. Fast turn times are in your control. The higher you are in your pro rankings, the faster UWM is going to touch your files. The more efficient you make UWM, the more efficient we're going to make you when working with your borrowers. And another big part of that's the ultimate loan submission, which Danny's going to talk about in a little bit, but that is basically how are you utilizing the tools at UWM? And again, Danny will talk about that in a little bit. CD at initial underwrite. Do you want your borrower waiting at the end of the loan process to be able to review their CD so you can get that loan closed? No. If you get home value estimator, which we provide for free on our website, you go ahead and get the taxes, which now we've changed things. Home value estimator will actually provide you with the tax estimate. You can now use that. So just go run home value estimator. You cover two things at once. Then go get an HOI quote or provide the previous HOI. Submit that when you're sending in your file. As soon as we approve that with conditions, that CD is going to go out. You no longer have to wait at the end of the process for that CD to fire, for that waiting period to exhaust. You can go ahead and get that loan closed right away once you get everything done. All right, and then the big announcement about a week ago was Uwm Appraisal Direct. We talk about efficiencies. We talk about the need to create a better experience. Brian was talking about earlier, you guys created a page to be able to go put bad appraisers in there, right? Well, they're not all great, but what we found was our industry was lacking the best appraisers, and you want to know why? Because of the AMCs. The AMCs are amazing partners, and they've done a lot for our industry, so I'm definitely not bashing our AMCs. They've done a lot, and they're great. However, appraisers don't love working for the AMCs because they know they can get paid more and get more efficient business, or consistent business, I should say, by working with lenders. When you look at the bigger lenders, the Chases, the Wells Fargos, the Bank of Americas, they're having their own lender panels. There's no reason why UWM now as a wholesale lender couldn't have our own lender panels. So with UWM Appraisal Direct, we are now going to pay the appraisers 100% of the fee collected. So if we collect $500, the appraiser's getting paid $500. What's that doing? It's already creating a buzz in our industry, and appraisers want to do business with UWM and our broker community. They want to do business with you. And now that they have that direct fee going to them, they're going to want to take these orders and get them done a lot faster than they are doing it for the AMCs today. And we're already seeing that. Thank you. And the last thing I want to touch on this. If you have worked with great appraisers in the past, please get them to go to our website and sign up to be part of our panel, okay? It's free to them, doesn't cost them any money, so please reach out to your appraisers, get them to sign up with our panel. October 1st, we're going live. We're already doing hundreds of orders a day. We have thousands of appraisers working on this right now, so please go ahead, get them over. We'll start getting them business. All right, last few things here. It's all about efficiency. As everybody in this room has been probably the busiest they've ever been, how do you take that to the next level? How do you continue to grow and scale without having to have a lot of staff, right? It doesn't always have to be staff that helps you grow your business, But that is the thing that will hamper your business. So you have two options. You either hire a lot of people to do it, or use technology to help you do it. And some of the things we talk about are Blink. So Brian, again, also talked about adopting some sort of application technology. Well, with UWM, we give you that technology for free, and you can send it to any lender that you want. But again, it's free, okay? Some of the things that we've done since we all last met in person was Blink turned into Blink Plus. And Blink Plus is now your replacement for a Calyx. You can run call reports, you can generate documents, you can price your loan. Anything you need to do is done right inside of one system. And when you talk about efficiencies for you, adopting a system like Blink Plus also creates a consistent and efficient experience for your borrowers, okay? Imagine a borrower working with you right now today, and you're not using this technology, right? They're maybe using UWM's e-sign, but then you're also docu-signing something to them middle of the process. Maybe you're getting things collected via email. Maybe someone's walking something in, and then we could say the horrible word that someone's still faxing something to you, but I know people still do have fax machines. It still exists today, right? But the best experience is to keep your borrower in one place from when they start their transaction with you all the way until they end their transaction with you. So if a borrower starts a Blink application with you and you generate UWM documents, the borrower is going to be sent right back into Blink to open up to sign those documents. You're not going to have to continuously train them or explain to them on what they need to do to get their loan closed. And with that, with documents, 97% of loans that come into our door use UWM's e-sign technology. So I'm not going to bore you with all the things that it does. But what I am going to tell you is a feature that's being underutilized right now. And that feature is the first one listed here, which is adding your own disclosures. So on your initial disclosures, if you want to go ahead and add in something, you can. You can add in a Word document, you can put the signature tag on it, and you can get your own documents signed, if you had any, with the initial package. But this also actually applies to the conditions as well. You can generate a blank condition package. And I use the example of a letter of explanation. If you need a letter of explanation signed, you don't have to use your own DocuSign. You don't have to go buy another system. Our system will do that for you and bring that document right back into UWM for your underwriter to review. Again, all you have to do is go to our system, go to the docs, generate that generic condition package. Once you do that, you can upload any document in there. You'll put the signature line on it. Your borrower will be able to e-sign that. It'll come right back to our system, and you're done. Why is that important? Again, we talked about borrower efficiency, borrower consistency. Your borrower already signed the initial disclosures in the system, so it's going to be really easy for them to go ahead and sign another document in the same system they are now already familiar with. All right, and then a real big efficiency for you guys, and what can create a real good experience, is the UWM InTouch app. And why do I say it creates a better borrower experience? Because all of you are here today, and I see a couple laptops, but I assume most of you don't have your computer with you. So a borrower calls, what are you going to do? If you have your computer, great, you can pull it up, or you pull up your app, and your app can tell you exactly what's going on with that loan. Let's watch this quick video.
What's the status of the Andy America loan? This loan is in the following status, approved with conditions.
Introducing UWM InTouch, the new mobile app from UWM that puts your pipeline in your pocket and lets you work from, well, anywhere. UWM InTouch lets you fully manage your loans from underwriting through CTC with Siri and Google Assistant integration, push notifications on loan actions, and quick access to everything you need to keep your business moving while you're on the go. With both fingerprint and face recognition, there's never been a faster way to get into your pipeline, or an easier way to find the information you want. Need to lock down a loan on the fly? All lock options available in Ease are available in UWM InTouch. Even exact rate, view pricing, modify the term, and lock in the best rate for your borrower with just a few taps of your finger. Clearing conditions is easier too. UWM InTouch lets you upload docs without having to fire up your laptop, or use your phone's camera to quickly capture a document for review. Even the fastest way to get the help you need is faster with UWM In Touch. Our powerful client request platform is built in and completely mobile friendly, but fully functional and more convenient than ever. And that's just the beginning. E-sign tracking, changes of circumstance, invoices, and more are literally right at your fingertips. So now, no matter where you are, UWM is there for you.
All right, so we're continuing to add more and more into the mobile app. How many people have the mobile app downloaded today? Awesome. How many people are going to have it after today? Everybody, thank you. Good answer, good answer. One of the newest features that I'll talk about is Easy Qualifier. So I'll tell you, I haven't done a loan in about 15 years. And if a friend or family calls me and says, hey, what type of loan can I get? I'm like, I have no idea, but hold on. I open up the app, punch their scenario into Easy Qualifier, gives me all the different loans that they would qualify for. I can now give them an answer very, very quickly. The same thing obviously can apply to you and your borrowers. So EQ is the newest feature. Make sure to check that out when you get in there. All right, and the last thing for me today before I bring up Danny is I always love to talk about our great partnerships because you can leverage the power and the scale of UWM when it comes to the tools that you pay for and that you use. The first one I'm going to talk about is Mortgage Educators, otherwise known as MEC. So for almost 5 years now, they have provided a massive discount on your 8-hour renewal, as well as new loan officer licensing renewal. So if you're recruiting new loan officers, you can get 50% off of their list price for that new loan officer 20-hour course. But I know we're wrapping up towards the end of the year. It's a great time to get in there, take your CE, get that done, $37. David Luna, who does most of the videos, is amazing, very engaging. So please go ahead and check that out. Tago. So Tago is one of our newest partners for building websites. We do still work with Lender Homepage, which builds great templated websites, but Tago takes that to the next level. Tago is able to do not only the templated websites, but they can do customizations that help you create the experience that you want specifically for your business. If you have not looked at your website or changed your website in the last 2 years, you are already behind the 8 ball of it needing to be refreshed. So please go ahead, think about that. 2-year-old websites are too old, okay? You need to keep refreshing it. You need to create engaging content. Make your site a destination. Tago provides you with tools that you could put on there, such as loan calculators, amortization calculators. They provide all these different tools that you can use to create an engaging website. So when you think about referrals, right? When you close a loan for a borrower and they're able to send someone else to your website and that person's now engaged with your site, that is more likely to turn into a loan than if they go to your website and they just read a bio. But don't be mistaken about bios and or your company and your company vision, right? I know each of you have things that are personal to you. What are you doing in your community, right? Those types of things need to be put on your website so that all of your clients know exactly who you are and who they're working with. And then the last thing here, I know Gordon's in the crowd. I know many of you know him. But Advantage Credit of Colorado was the first company to do the credit discount. If you haven't yet signed up for one of our discounts, which we now provide it through 3 different companies, you are wasting your money and you're wasting your borrower's money by not taking advantage of it. It's a $31 tri-merge joint credit report. It includes up to 5 supplements, all your reissue fees, and all your lender assignment fees. This will save you a minimum of around $30 a month, if not more, depending on how many times you reissue it, or if you reissue it to LP or DU. So please go in there, check these out. They're on our website, or you can talk to one of your amazing account executives at C2. All right, so with that, I'm going to bring up Danny Marogi. So real quick, Danny Marogi has been with C2 for over 10 years now. He developed the relationship and got to build his business with all of you. Now Danny is training a team of over 10 account executives to help support the C2 family of business. They are there and dedicated to all of you to help you grow your business. So Danny's, now our VP of National Accounts. And with that, let's bring up Danny Marogi.
clicker doesn't work on that side.
Wow, it's good to be back, huh? Everyone in person, super excited. So super quick, I want to give a round of applause to those amazing 10 account executives over there. They do a fantastic job every single day. You know, they dominate the role. They've helped, I know, single-handedly build a lot of people here in the industry and help develop a lot of loan officers coming from retail. Speaking of, if Desmond is still here, you obviously made the obvious choice. Wholesale is the place to be. It is going to be the future of this industry. It is faster, easier, and cheaper to work with a wholesale lender versus retail. So I mean, that's you know, attributed to everybody in this room. The Geraldine Shaws, the Dan Keys, the Janet Shanners, you know, Siders, the whole crew, Enzo Morales. I mean, everybody here, Diane Luongo, everyone that came from retail has not only grown their business, but seen an exponential growth when it comes to referral base because you're able to close loans in less than a week. You know, you're able to dominate technology. I mean, everything is given to your fingertips. The next step in this industry is going to be bringing on those retail loan officers and showing them the benefit of wholesale and creating teams and dominating with, you know, whether it's branches or, you know, developing your own business for growth in the future to come. So, yes, wholesale is the place to be, Desmond, and you made the right choice, buddy. So I'm going to go ahead and dive right into it. So I'm going to talk about a few things that can help you develop growth and you know, maintain a great referral base. So the first thing I talk about is, you know, how many people in this room have a Google page, you know, or whether it's a Facebook page, whether it's some type of page that allows a borrower to go on and do reviews about you in this room here. If you don't, I highly suggest doing it because the first thing I do, for example, God bless you. The first thing I do when I come to San Diego, I look for some good restaurants. And the first thing I look at is their reviews. I want to see who's good, what they're talking about. If the food is good, I want to jump on it and attack that restaurant and go eat there. So if we don't have that, a lot of consumers, when they're looking at you, they're going to say, okay, you know, how do I know, you know, Jenny over there is a good loan officer? What can I learn from Jenny? That tells a lot. Now, not only there, 9 out of 10 buyers, this is a factual data, 9 out of 10 buyers use an online resource at some point in their search to purchase or refinance a home. This is super crucial. So I definitely highly recommend getting on there. Same concept with Zillow, Google, Facebook. That's another big one, like putting a name with a face with a name. So definitely pushing that. Now, what ties to that as well, too, what's up with this clicker? There we go. So how many in here has ever received a negative review? And by all means, it's not even a bad thing, right? Like, how many in this room have received one? I'm sure I've gotten one. I'm sure quite a few of us in this room have got one. Now, the power of a negative review can always instantly be turned into a positive, and here's what I mean by it. How many in this room have responded to those negative reviews, have commented? It's always crucial to attack those negative reviews right away. Not attack them in a negative way, but, you know, responding to a review is important in this business because now it shows that you're available. You're automatically guilty if you're not responding to a negative review. It's 100% factual. If a consumer goes on and looks at one of your reviews and they don't see a response on there, that is automatically going to make you look guilty, and we definitely don't want that. So, also surveys. Like, how many in this room have a survey, like whether it's SurveyMonkey, Signpost, something that you send out to your consumers after each transaction? How many in this room utilize this? If you don't, I highly do. I recommend it because this can not only help you get referrals, but it turns your consumers into promoters, right? Feedback is crucial. One thing that UWM strives on, and I take huge pride in this, is making sure that we crave feedback from every single one of our consumers, whether it's share, whether it's, you know, our brilliant ideas that we rolled out with UWM years ago. A lot of the stuff that we roll out is coming from everybody in this room. So this is important to send out. Send it out after every clear to close. Send it out. Get some feedback, whether it's positive or negative, something that you can get better at, something that we can get better at. I highly recommend getting on one of these because it's going to help every single one of you grow, grow your business. Also, this is a big one. So I want to hit on this. Facebook, LinkedIn, Twitter, Instagram. So how many in this room have seen your account executives post on LinkedIn or Facebook and tag you in it and talk about your 6-day clear to close, talk about your 10-day clear to close, your 12-day clear to close? So here's the power of social media. I'll give you an example. I see Kenny over there in the back raising his hand. Here's the power of social media. For example, I'm going to go on Facebook and I'm going to put in there 6-day clear to close, congratulations on your purchase. Now I'm tagging the selling agent, I'm tagging the buyer's agent, I'm tagging the borrower. What does that do? For example, Jenny, the selling agent, has 3,000 friends on her Facebook. Everybody on her Facebook is going to see that post. That is free marketing. Same thing with Bill. Bill, the buyer's agent. I'm tagging Bill. What does he do? He has 4,000 friends. Then I'm tagging, you know, Alan. Alan has 2 friends on Facebook. Like, at the end of the day, you're reaching every single one of those consumers, borrowers, potential refinances. I was in Northern California. I was speaking to Elva Warmley, and she single-handedly said, because of the fact that my account executive, Haas, posted on social media and tagged me on it, I was able to get 2 more purchase transactions. And guys, this is all free marketing. Like, this isn't something that's costing you any money. You can put somebody, running your social media on a daily basis. Same concept with LinkedIn. It's all free. Posting about your company, sharing C2 things, sharing ideas that C2 rolls out. I know C2 has been heavily involved in LinkedIn lately. That's a big one for everybody here because now you guys are the #1 brokers in the nation. Let everybody see that. Like, that's one of the biggest tools that you can utilize to get consumers to work with you, whether it's a real estate agent, whether it's a borrower, a refinance. This is something powerful tool that you can utilize. Same thing with Twitter. Simple words, free appraisal. Talk about trending, right? You type in free appraisal on Twitter, that thing's gonna trend like crazy. Something as simple as that, you can get to trend to get people to wanna reach out and see what's going on. And of course, Instagram's a big one for photo, video content. When you're out and you're having a lunch and learn, or you're in a B&I group, I know a lot of you, Diane attends a lot of B&I groups, like posting those photos, it will get somebody to want to reach out to you. And it's out of sight, out of mind, same concept, right? If you're not doing this, people don't know what you're doing in this industry. So this is another powerful tool that you can utilize. This is why I'm a huge promoter of social media. I know a lot of my account executives use this like crazy when they're posting on LinkedIn and they're tagging you. It's only to benefit you and help you grow your business. Now, big one, so ultimate loan submission. So this is one thing I want to hit on because first thing I think about with ultimate loan submission, how many of us in this room use it? Perfect. One-touch CTC. Statistically proven, the ultimate loan submission checklist. So first thing we talk about when I talk about the ultimate loan submission, how many of us in this room are using Blink Plus? Few of us, okay. Okay, fair. How about EaseDocs 2.0? How many of us are using our e-sign package? Perfect, okay. Same thing with UTrack. So I think this is one of the most underutilized tools that we have that can help you grow your business. So for example, the first thing I pick up when I talk about UTrack is I can single-handedly go in there. I think of Amazon. First thing in my head when I'm tracking a package in Amazon, it shows me a status bar, and I want my package, right? When's it going to show up on my front door? Like, Amazon's gotten so good at it to where the guy's walking up to my door, and I can see the package sending me a text message. That's the same thing with UTrack. So when you're typing in the realtor's information, so all you have to do is go to your contact section in Ease, and then you put in the realtor's email address. You can also type in the borrowers. It can be multiple individuals that you want to send this to. And it sends them a status bar with your info on it. It's your contact info, your full name, your phone number, your email address. And the borrower, the agent, is able to track the status of the file. Now, it does not go into detail for a specific reason because, frankly, they only need to know whether they're approved with conditions. It tells them if their appraisal's been cleared, what stage they are in the process of the file. Realtors will eat this up because now they're not constantly bombarding you. First thing I think about with realtors, and my wife's an agent, so I have a conversation with this all the time. I say, hey, what's the biggest thing you want from a loan officer? And that's communication. Communication is the most important thing that she thinks of. Well, this is a good tool because let's say it's 10 o'clock at night, you're busy with your family. UTrack can show them the status of the file so they can communicate with their borrowers and let them know where they are and what the status of the file is. Also, One-Click AUS. I'm not going to dive into this, but if you're running One-Click AUS, that is another ultimate submission checklist. So if you're doing that, that goes into your ultimate submission. My favorite thing about One-Click AUS, you can't mess up. It's very simple. It tells you whether to use DU or LP, one-year tax returns, waivers. It's one of the best tools that we have to offer and rolled out. Also, docklist. So this is a big one. So as long as you attempt docklist, the VOI and the VOA, you get a credit for ultimate loan submission checklist as long as you attempt it. We know that it's 90% accurate when it comes to gathering the income. That 10%, even if it doesn't get a hit for the income, you still get the credit for the ultimate submission. Every ultimate submission that you get with UWM gives you 2,000 loan officer partner points, and it's unlimited. It does not expire. You can use those partner points towards incentives, gifts. You can use it for closing gifts, shirts, swag, whatever you want to utilize it for to help you grow your business. You can tie the ultimate submission to this by just utilizing this. Processor assist. Alleviate some of that stress from your processors, right? Whether it's ordering the HOA. Everyone knows in this room we pay for the HOA docs and we collect it at closing, right? We pay for the HOA cert, we pay for all the documentation that the HOA requires, and then we collect it at closing. And if for some reason that loan does not close, you are not responsible for it. I would be taking advantage of that all day. Same thing with payoffs. You can put the specific date in there that you want your payoff to be ordered on. HOI, all of that stuff that you can alleviate from your processor so they can focus on what they do best, getting files in the door and getting them closed for you. and not having to chase down these third parties. Let us do that work for you. We have over 800 people in that department that solely focuses on getting this stuff for you. So let us do that headache for you. Same thing with CDA initial underwrite. I know this is a big one, so utilizing CDA initial underwrite, using the value estimator, taking advantage of that, that is also another checklist. Same thing with the appraisal manager, right? So you're utilizing ordering. Now that Appraisal Direct rolls out next Friday, everybody in this room is going to be ordering through appraisal manager. That's going to go towards your ultimate loan submission checklist. And then last but not least, we got UClose and then Brand 360. So these are two big ones. I know everyone in this room uses UClose, and a lot of you use Brand 360. That ties into your ultimate loan submission checklist. And then if you ever want to check to see if you got an ultimate loan submission, so everyone knows where the clipboard is, right? So right next to the borrower's name is a little checkboard. You just click on it, and it shows you all the status of the files. It can tell you right then and there if you've utilized the ultimate loan submission checklist. Now, in order to get an ultimate loan submission, you only have to hit 6 out of the 8 that's on this screen. That'll give you full credit for an ultimate loan submission, which will also give you those loan officer partner points. So that's another big tool there. Also, last thing I have for today, and I think this is a big one, and I'm a huge fan of this, is the Uwm Triple Play. And the reason why I call this a Triple Play, it's just another competitive advantage to give you to be able to compete in that industry, especially in a high-level refi market. You know, how many of us in this room close loans in 8 days, but we're locking for 30 days, right? The difference between an 8-day and a 30-day lock is about 22 basis points. That's 22 basis points that you could be giving your consumer, right? Same concept, like some of us float and like to gamble the market. Taking advantage of custom rate locks, you can pay for however many days you want, whether it's 8 days to 60 days. It's all up to you. Taking advantage of that. Also, exact rate. So this is one of my favorites because it creates opportunity for your competitors to not be able to compete with you. This is all about you. Here's an example. 2.875 is a going rate right now in the industry. 2.874 with United Wholesale Mortgage pays the exact same as 2.875. Do you know what your competitors have to do to get that borrower? They have to drop to 2.625. Because they can't offer 2.874. They can't offer 2.873. United Wholesale Mortgage is the only lender in the wholesale channel, most likely, I would bet retail as well too, that offers the exact rate option. And that alone right there would give you the advantage that you need to make sure you secure those deals, especially in a high refi market when borrowers are being called left and right to refinance and try to steal that loan away from you. And then last but not least is flex term. Big refi market, going from 8 to 30 years, being able to choose the term for your borrower, that is a big deal when it comes to, you know, borrowers not wanting to go to another 30-year mortgage. Okay, great. We'll give you a 28-year mortgage, drop your rate by a quarter, and save you a couple $100 a month, $100, $150 a month. But at least now you're not restarting their amortization. So this is why I always take advantage of this Triple Play, because these tools that you have right here, these 3 tools, are not offered in this industry. So being able to deliver this to your borrowers sets you apart from your competition. And I've always been a big fan of setting myself apart from the competition because I've always wanted to stand out. And when you're standing out, you're creating a lot of buzz. People look at you, whether it's realtors, borrowers, anybody in this industry. That's all I got. I'm super excited. Guys, Saturday is going to be a big day. So I know I can't talk about it today or else Mr. Fannie Mae over there, Alan Baydoun, my direct boss, they're going to have my neck, but we have a huge announcement that's rolling out Saturday. I truly believe it's bigger than anything we've ever rolled out in this industry. I think it's going to roll out a lot of heads. It's bigger than Appraisal Direct. It's bigger than any pricing incentive that we've ever rolled out. I think this is going to change the game in the wholesale industry, and it's only going to allow everybody in this room to compete, and that's one thing I want to leave everybody here, and that's one UWM promise that I can make to everybody in this room, is we're never going to relax. Matt Ishbia is never going to relax. Our team is never going to relax. We're always going to be here for you, help develop, come out with cutting-edge technology, come out with cutting-edge tools to help you dominate and take the broker market to 60%. Thank you, everybody. Appreciate it.
It's always a treat to present to loan originators. I know that sounds crazy. Like, why would that be a treat for me? Normally, I do a fair bit of public speaking, and obviously COVID took public out of public events. So that dissipates, so it is fun to be back in person again. Normally when I present a slide deck, and I actually would have needed this clicker here. One of the things that's fun about presenting to y'all is I can make it more dynamic. Because I have 3 enterprises, one of which Drew alluded to, a financial services firm, Pacific Advisors, of which I'm one of the partners, with 160 advisors and agents. A lot of similarities between our industries. And as we're looking at what's next, I get to be a little more dynamic with you all because of those parallels. And then a couple of years ago when I found out we're, in some cases, some of the centers of influence you're looking to create relationships with, there's some insights I can bring to it there too. So I will try to focus on that also. So it really is a treat to be with you today. The enterprise I am actually speaking with is Nexpectations. And really, it is an intention to really align people to what's next. Now, I have a certain mission in my professional career. I don't know where you all are at. By show of hands, how many of you imagine your career is going to go past 2030? Can I see hands? High? Okay, that's most folks in the room. Good. For those of you who imagine you're done here in the 2020s, and your career is going to be done, maybe some of what I talk about will not be as critical for you all. But I think for those of you who imagine you want to see 2030 and beyond and success, I think you'll find some of this really helpful. So with that, let me go ahead and get started by talking about how to prepare and why to prepare for change. One of the things I try to do on a professional level is I look at whatever year I'm in and I go, okay, how can I get it so that 2021 Eric can kick 2020's Eric's butt in my profession? And I don't know what your all's commitment is. What I love is that C2 puts together events like this. You guys are exposed to incredible amounts of opportunity. And the important part of it is keeping ready for what's next. This is a great metaphor. This is a real bridge. I believe it is in Honduras. I believe it was a gift from Japan. Can you imagine? Like, you know, like they didn't include a gift receipt from Amazon to return this, by the way. So this is truly a bridge to nowhere. It was, at one point, a bridge that had water under it for sure. And then the storms hit, and it moved. In very much the same way, our careers and our professions, especially being professionals in an arena where we are in distribution, we have a very similar distribution model, right? There's folks that are hitting up on the retail, trying to go direct to client in a way that removes some of the distribution systems. And as those things shift, if we don't shift with it, then the market moves over to here and we're not ready. And so what's really important is to start thinking about how you are seeing these shifts and preparing yourself for them. Now, this was just a Google search last week. And I actually typed in, it's funny, again, the parallels between our industries. I actually typed in mortgage and TikTok. Mortgage and social media, I can't remember which it was. But what I ended up getting back was actually something I need to now go show my advisors. Thank you very much in preparation for this. But I don't know if you guys can see what I've got on the screen here. This was from typing in mortgage. If you guys go and look up mortgage and TikTok, right? Things along those lines. And this stat, more than a third of Gen Z, now Gen Z, like this is the generation that's, I think, coming into like age 25. Yeah? TikTok and YouTube. This is where people are getting their information from. Do you know what it means when people start getting their information from a place where you're not offering information? It means the river moves. And so we need to be adapting to all of this. And you'll see it's all over the place. Like they're just talking about, and by the way, when it says talking about money, again, this really relates to our profession too. Like they're including money altogether. Like, so they're talking about mortgages and things along those lines as well. And I'll show you actually somebody who's a loan originator on TikTok a little bit later in the program. So what do we do? What do we do when things are changing? And I want to share with you, so okay, strategy. Strategy is like this word, everybody uses it. It's a plan of action. A strategy is a plan of action. A plan to get from where you are today to where you want to go, and you can't just snap your fingers and do it in one step. What strategy do you have to use when things are constantly changing? And I'm going to share with you a distinction that I found extremely helpful. It's called a dominant strategy. So if a strategy is a plan of action, a dominant strategy is any plan of action that has the greatest likelihood of success, regardless of whatever happens next. You got that? A dominant strategy is a strategy that has the greatest likelihood of success, regardless of whatever happens next. And you want to stack up the dominant strategies. To give an example, do you guys recognize this? Now, if I had a room full of Gen Zs and maybe some younger millennials, you would say that's a hashtag. But that isn't what I was drawing up here. And you guys probably didn't think it was a hashtag, or did you? Some audiences go, hashtag. No, right? Yeah, there we go. Tic-tac-toe. OK, good. I'm always trying to figure out how far off I'm aging out from my audience. So, but I did, the only reason I knew to make fun of that is because it actually happened to me in an event. And someone goes, oh, hashtag. I'm like, oh, yeah, no, that's not what I was going for at all. So I want to use this as an example of dominant strategy, because dominant strategy actually comes in economics from game theory. And so it's a real thing. It's not just an Ericism, although I have plenty of Ericisms as well, and I'll try to tell you when those are my invention. When playing tic-tac-toe, and using it as an example, the dominant strategy is where you would put the X if you were the first one to go. Where would I put it? The middle, yeah. You'd put it in the middle. Why would you do that? Say it. Highest degrees of possibilities. Yeah, the most outs, the most opportunities to win. Now, you don't know what's going to happen next. You're the first one to act. So if you follow this, you'll say, OK, there's 1 way to win, 2 ways to win, 3 ways to win, 4 ways to win. 4 ways you can potentially win. Now, if you were to, say, put this in the corner, how many ways can you win? 3. If you were to put it in a T-spot, that's dominant strategy. So dominant strategy would be to place it in the middle. So what do we do in our professions when we're trying to adapt to what's next that gives us the greatest likelihood of success regardless of what happens next? So I'm going to share with you an example of dominant strategies to be aware of. Like to understand the mechanics of how people work, and to understand the mechanics of how to be successful in how you market yourselves, especially. I'm going to show you the bread aisle. Now, you should see how funny people look at you when you try to get a lot of the bread aisle in a photograph in the grocery store. And hold on, I need to get this one part of it in there, and you'll know why in a second. And then people go, you can go, walk by. And that's why my daughter, when we were sitting around the dinner table a year or 2 ago, turns to my wife and says, "Why is Dad so extra?" Because I take pictures in the grocery store like this to illustrate a point. And the point is that, for example, one dominant strategy is the principle of marginal utility. So there are 10 laws in economics, and it's like number 4 or something. People respond to incentives, and the principle of marginal utility is like number 3. And there's you should look them up, like Mankew's 10 elements of economics, the 10 laws of economics. The first 5 tend to be very relatable to professional business. You get to the next 5, and they're like big government systems and stuff. The principle of marginal utility is that human beings transact on the margins. Not something marginal like it doesn't matter, but the thing that they focus on is the difference at the margins. They treat everything that's the same like it doesn't matter, and they're looking for what's different. It's why when everybody came up here in the rapid fire round of the lenders, right? It's why you all spoke to your differentiation. You're trying to help people see on the margins what was unique. So one dominant strategy is to make sure that if you know human beings are going to look for those differences, and that's what they're going to expect or value, then you'll want to focus on marginal utility. Now let me give you an example using the bread aisle. If you start going into the grocery store and you start looking at bread, and one bread is like another bread, or maybe it's similar to, say, I don't know, can you guys see these prices? Okay, so here's $1.97, that's a little bit more, right? But it's, let's say it's basically bread, and it's similar. Here's a similar, this is a muffin aisle, technically. I think it's like breakfast breads is the part of the aisle I think I'm in. But then all of a sudden you start coming over here and, what? What's happening over here? It's like more than double the price. Because it added what? Raisins. It added raisins. So for people who like raisins, that is enough of a difference that they can literally charge like as much as double from normal bread. That's the principle of marginal utility at work. Human beings look for, now, if somebody hates raisins, they're not going to pay double, of course. But for people who really want raisins, this is a big deal. So when you are working with clients, when you're working with your relationships to get referrals for clients, what's your principal margin utility? What are your raisins? Not because you can charge twice as much for the loan, but so that you can close twice as many. Now, by the way, this whole room and all the presentations you've gotten today is like margin utility after margin utility after margin utility. I just don't know. I want to make sure you guys are seeing that. If you are, so, okay, let me try this. When all else is equal, like 90% of bread is probably overwhelmingly the same. All they did is, for the most part, probably just add some raisins to this thing. But they can charge more than twice as much. And that is because when everything is overwhelmingly the same, what ends up happening is you get priced. All else being equal, if these two breads were exactly the same or similar enough, what would you buy? For $2.17 or $1.68, all else being equal? You'll just go to price. People will go to price if everything seems the same. That's all they can do. The problem with price is it's different than value. It's critical in your practice that you don't get priced. You want to be valued. When you have margin utility, people are forced to value that thing at the margins you have that others don't have. Can't remember who it was when somebody shared that they can let you dial down to like decimal points of like rates just to come in, like just to mess with people a few bips less on the rate. It's like those are raisins. Like you understand that, right? And then when all these lenders come up here, like first of all, you've got like a juggernaut. That's probably the only one's going to beat, you know, how we do tax software loans. And then you've got this like array of raisins, offers of like arthroscopic surgery of mortgage lending, all these different lenders that have all these specialties. It's like amazing. Line them up and be ready to use them so you stay valuable and you don't just get priced. That's one dominant strategy. Some other ones, and this is why I get to have fun with you all as opposed to just use plain old slides. Another one is diversification. Now I'm not speaking my CFP hat, but I might as well put it on for a second here. Diversification makes almost everything stronger over the long horizon. They have what's called, in investing, they'll have what's called risk-adjusted returns. Risk-adjusted returns, meaning for a given level of risk, you want the greatest return. You want to be compensated for the risk you're taking. The best strategy in almost any kind of investing is well-diversified. Now, it turns out that works in business organizations, like well-diversified thinking, like lots of different ideas in an organization around everybody thinking homogeneously and exactly the same. Different perspectives. It works in investing like, yes, investments, like what we do in our firm. It also works in strategy. How you create your plan to bring marginal utility to your practice. So some examples of diversification, which oftentimes, let me give it to you this way. To show the power of diversification, if anybody's followed, like, knows anything about football, and they get to the very, very, very end of the game and the team is really down, but they've got one more chance to score. Anybody know the name of that play they sometimes run at the end of the game when they're desperate? Hail Mary. The Hail Mary. They run the Hail Mary. You know the Hail Mary? That's that one where they like bomb it off at the end and everyone like stands up and like, you know, and hoping it works. That has the highest expected yield of any play in football. It's supposed to yield a touchdown, yes? Okay, so it has one of the highest yields. What's the likelihood of it? Really low. Because if it was really just about the highest return that's possible, wouldn't they just play a whole game of Hail Marys? But they don't. Nobody would play a whole game of Hail Marys because it's not about just the highest returns of a given situation. It's about diversifying for the strength over time. So as you look at your practice, part of your diversification is sources. How many of you get all of your clients, so we've got like lights on my face. How many of you get all of your clients directly? You don't use any centers of influence or referrals in from people? A couple of you are straight to a client, okay? How many of you use referrals in from other professionals? Raise your hands. Good. Diversify them. I mean, actually, here's the thing. Do or don't diversify. I don't know how to, no matter to me. What I will tell you is that they're going to go through their own cycles. They're going to go up. They're going to go down. They're going to go through their swings. And the more diversification you create when something goes up and something else goes down, you're in a good spot. So obviously, the real estate world, many of you work with that. You know, try to, like, you guys look into, how many of you use real estate folks for your referrals? Okay, several of you, okay. Diversify them. Like, see that they, for example, when you work with them, try to get multiple counties covered, like geographically. Notice real estate people tend to focus on certain geographies. Yes? No, it's not yours. Some of them tend to be very focused in a certain geography. You can diversify that way. CPAs are another type of advisor that some of you work with. Advisors, we're some of the people you want to work with. By the way, should I put on my CFP hat for a second and just share with you my take on some of the things you were presented this morning and some of the things that they said, like you should be talking to financial advisors about? It's true. It's true. Especially, like, for example, when Scott and like the whole C2 reverse mortgage team, like, I just have to hand it to you guys, like the amount they are knocking themselves out to try to educate you all and bring you guys to an ethical standard that is unmatched in the marketplace on reverse mortgages. So reverse mortgages still have an awful connotation in the marketplace. Like they still are thought to be these evil, awful things. But now with the HECM and the other reforms, it's just not true. In fact, it may really be one of the only ways that the overwhelming majority of Americans are going to turn out a retirement that looks anything relatable to them from pre-retirement. So in talking to folks in the financial advisor world, or the wealth, and now okay, the term financial advisor like has lots of meanings. People use like financial advisor in different ways. I'm talking about, let's say, investment advisors, like people licensed to do investments and wealth management. And I'm talking comprehensive advisors like CFPs who do planning, including sometimes wealth management, but other planning as well. Okay? So those are, when I say advisors, that's what I mean there. For folks who are responsible for helping people plan or make their investments work out all the way through retirement, what you heard today, and even the strategy, I presume you guys covered it this morning. I attended the session last week where they started showing you some of the withdrawal strategies where if you use the HECM, or reverse mortgage as a way to down markets to take from the HECM line? It's correct. It's correct. Like it is from a, like you understand, like I'm licensed and all this stuff, like right? We've got $4.5 billion in assets under administration in our firm. So here's the thing, it's correct. That is, like there is a way to structure that is more powerful than not using it. If you go to a financial advisor or wealth management person and you say to them, now I wouldn't recommend the scold method, you know if you're not ... that doesn't, that probably won't work so great. I like questions. I find questions are really helpful. Have you found, as you look across your client base, that many of them are going to struggle to live anything resembling their current lifestyle in retirement? Do you have anybody that you're worried is going to take a big hit to their lifestyle when they head into retirement? Of course, it's like literally the overwhelming majority of Americans. No, I only work with the people who are independently successful to the point where they have multi-generational wealth. Are you kidding me? It can't be. And of those people, where it's going to be difficult for them to imagine a lifestyle that looks the same in retirement as it did pre-retirement, what is likely to be one of their largest assets outside of maybe what they're doing with you in investments? Their home. Now, I know you know. I'm saying this is what you can say to them. Like, work with them to realize it themselves. To the extent that you can trigger people to realize things for themselves rather than tell them, they'll own it more. And if you don't want to have to be, like, I don't know how to put it, in case you get folks that are like, hey, why are you telling me about what to do with the investments in the retirement plan? Like, this is what I do. I tend not to try to beat people up with like what I might know about their profession they may not know, like you guys know stuff I don't know. I'm speaking fundamentally. I'm not speaking specifically about how you guys should run your practice. I'm speaking fundamentally about how you should run it. So if you don't want to do that, just Google the name, see if this shows up. Can you see this? Wade Pfau, and type in HECM. Yeah? Just Google that term. Wade Pfau, CFA, Chartered Financial Analyst, which is considered one of the highest financial designations in the industry. These are people who do institutional investment strategies. Super prolific, one of the thought leaders in retirement income planning. He's one of us. So don't beat them up with the head. Show them Wade's article on it. Let them see one of their own tell them. Just send it. Say, hey, I was curious. I'd love to get your thoughts on this article. We've got clients throughout our firm where they've positioned this in their world, and I have to imagine you're looking at some of the people you serve maybe not going to be able to live the same kind of lifestyle they would have liked in retirement as they're enjoying pre-retirement. Would it make sense for me to come share some strategies and ways we might be able to work together on this? Is that helpful? Yes. Okay. Sometimes, we talked about this, Scott and I were talking last week. I know because in my own firm it's the same way. You can never be a prophet in your own land. So Scott says it, sometimes it can sound like Charlie Brown's teacher, wah, 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 wah. That's how maybe I sound in my own firm. It's like I sit here and I like do keynote speeches, but I can go back to my own firm and everyone's like, wah, 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 right? Okay. So this would be, like I'm telling you, like from the perspective of our industry, it's correct. Okay. So now as you're looking at diversification, looking at who you work with, the sources of people, looking at your capabilities, increase your capabilities, learning new capabilities. And so in that, how many of you present, like I'm presenting to you now, how many of you present and educate groups of people in webinars, seminars? Only a few. To the extent that y'all can get comfortable being uncomfortable and trying that, to develop the authority. Now, it doesn't have to be you have to speak from like a big stage. It doesn't have to be like that. It can truly just be an intimate Zoom meeting. It could be an intimate in-person office gathering with some real estate professionals. If you've got something to present on that would educate them, financial professionals, right? That's still presenting, where one conversation can deliver multiple opportunities, and especially over time. You're going to want to work that skill. That leadership is going to help when that water moves from under the bridge. Technology, social media. I just showed you how much social media is being relied on. There's like vendors you have here that are like giving you articles that you could be emailing and to stay front of mind, and social media where people's eyeballs are looking, and they'll help you create the messaging. Some of these things like BombBomb, we're not even allowed to use them in our industry because we're so heavily regulated. I wish we could use BombBomb. They're like sitting here trying to say, and I just love saying BombBomb. And you guys are like being handed it, like as an opportunity to just start leveraging and creating that personalized relationship through video, which is like showing up like everybody in the under 40 crowd is getting so much information through this method. Technology, how many times do people have to come up in the presentations in one day to tell you guys to move away from like a 10, 15 year ago technology? Like, the water left, it's not under that bridge anymore. Move a little. Now again, I'm not like hitting you hard. If you really are going to be fine in your career and you don't need to change anything because you're done in like the 2020s somewhere and you've got a great stream of folks and you can ride this out, cool. Like why put in the effort, why put in the cost? But man, they're good. Most of these people, they'll train you, they'll orient you, they'll get you set up on it, right? Figure out what new technologies you can do so that you're not left in the wrong place in that. Your offerings, of course, refi has been incredible for the last couple of years, but purchases, I love it. You know, right after this, you've got like the real folks talking, you got your producer panel, right? The real folks are coming. Like I was at the producer panel last week, and I loved how one of the women who was successful said, I don't know her exact words, but the sentiment was on the VA loans. She said, I pretty much make sure that everybody knows I speak a second language, and it is VA loans. Those are raisins, right? Like when people think of her, when they think of VA loans, they think of her. So you looking at all these things, this reverse, like they have a school. They have designations that'll help you get set up on. I just learned there's less than 200 people with that designation. You think that's a raisin in the bread? I'm one of under 200 people that have a designation for how to ethically and effectively align some of people's most valuable assets to make sure they can live a decent life for the rest of their lives no matter how long they live. Are you kidding me? Do you know the single biggest risk in retirement income planning is longevity? People are living longer than ever. I mean, okay, yes, mortality did drop just a little bit from COVID. That's true. I'm confident it'll bounce back. They're still living a long time. Like, let's put it this way. For a couple that's alive of average health by age 65, married and 65, the odds of one of them being alive at 92 is 50-50. And you've got a tool that lets people not only derive the financial benefit for the equity that may be in their home, but actually let them live in their home. Oh, but it expires at like age 150. Like, what? So, I mean, you guys are sitting on, I think, a tremendous opportunity there, and you've got people here that are just like cutting edge in terms of education and helping you. All right, commercial, real estate, you guys have that under the roof. It's amazing. The second dominant strategy, enterprise, the third now, I'm on marginal utility was the first. Enterprise teaming. For the most part, just like financial advisors, y'all are solopreneurs. You're up against enterprises. You're up against billion-dollar budgets. That's how the consumers are being hit right now. The way to overcome that isn't to stay a solopreneur without help. Now, the fact that you're part of C2 means you already have a competitive advantage because C2 is already enterprise teaming. Right? So y'all, just like our profession, solopreneurs, we do this at our firm, enterprise teaming. The collective bargaining power of C2, like, you know, people walk up here and go, and for C2, we're going to like drop the points of this. We're going to offer this. We're going to do that. Like, just because you're with C2. Who do you think gets the big negotiation power? A group that has 1,000 loan originators or a solopreneur out there trying to do it without 1,000 loan originators? Right? That's enterprise teaming. The vendor partners, like literally everybody here that came through today, handing all these raises, it's brilliant. It's fantastic. And the fact that you have some of these folks out here, especially one of these juggernauts back here, that is trying to protect the very distribution method of your profession. Like, do you understand there is an organization here that has bet everything on you all as the ultimate distribution methodology? We have this in our industry, you understand? Like, I'm speaking like as if I'm thinking of talking to my own advisors, right? Like, you need to really embrace the fact that these people are doubling down to make you successful in enterprise teaming. So continue to team, continue to use and leverage these opportunities. Now, I was also wanting to make sure that Maya Angelou said, they won't remember what you said, but they'll remember how you made them feel. I'm like, gosh darn it, I hate that. It's totally true, but I intrinsically hate it. It's like, no, remember something I say. But the one thing I would like you to identify for yourself, for your own practice, so that you can stay competitive, is where do you need the most help? You're going to need it in one or more of these areas, and don't worry if you're like some of us, is like, wait, I think I need help in all of them. Yeah, you probably do. But you're going to need to pick a pain point. I remember my grandfather, when he turned 80, I asked him, what does it feel like to turn 80? And he goes, you know, it's been a good ride. It's not too bad. He goes, what I have learned is that I've learned that you can pretty much only have one pain at a time. And I go, what do you mean? He goes, like, if you ask me today, my back is the thing that hurts. But if you took care of my back and all of a sudden could just make it go away, I'd tell you, oh, my knees hurt. But if you made my knees go away, oh, my neck hurts. He said, really, there's lots of pains, but just one pain today, and it's my back. Tomorrow, it might be my knees. Well, what is your biggest pain right now? What is the thing that would, if you were to unblock it, what would create the steady stream of opportunity for you? Is it that you need to work your sources into better marketing so you have a steady stream of qualified people to talk to? Great, focus on that. Is it that, no, I've got the leads coming in, but I need to be able to transition more people into converting to sales? Like where they say, yes, I'm going to work with you. You are my loan originator. Is it, no, I've got them working with me, but oh my gosh, I got to close these things or people end up leaving or it doesn't work out or I'm spending too much time with the wrong people. I need help and fulfillment of moving this prospect into signed off and they've got their loan, or ongoing. I like, once they're out of sight, they're out of mind. I don't ever go back to them, and there's all this opportunity because, you know, we're like in a state that like people move like constantly, right? So which is it? Pick one, at least one. Like right now, write it down for goodness sakes. Write down like the area. Is it marketing, sales, fulfillment, or ongoing that has you most like where you go, that's the thing I would like to target on to close this year strong. I don't mean like you're going to all of a sudden have everything fixed in it. I mean like you're committed to like closing the gaps in that area more than any other. And then close it. Now when I say close it, small changes over time make a big difference. And a methodology, just to make it simple, is if you're going to modify your behavior, your practices about anything you do, they've already figured out you can't stop things psychologically. Did you know that? Like humans have real trouble stopping, quitting. There's something we're doing in our patterns that apparently our brain and its transmissions and all this stuff, where stopping is not like really the goal. Stopping actually causes all kinds of failure rates. But that really what you're looking to do is start or replace. Like if there's something you're doing that's less effective, like getting distracted by this and this when you know you want to be working on that, like you're going to have to replace that practice with something else. And so what I found most helpful are these three words when I'm trying to modify. Pick, define, assign. Pick, define, assign. Pick something you want to change. That's what I was just talking about. Either that you want to, in this case, start doing, or that you're going to change your practices in doing, not stop. Start or change. What is it? Now, I just had you identify one. Hopefully, you came up with one, but it could be whatever you want. And you can do this ongoingly. Don't do this once in your life. Define what would make that successful. Give yourself a standard to reach with it. I would call it successful if I could double the stream of leads I get in a year. Great. I mean, you need to know what you get now, right? And then you know double what that is. What is the standard of success? Sometimes there could be one standard of success. Sometimes there could be multiple. You don't have to literally have 6. Right? But what is that standard of success? Just know what it is. By the way, I will make this available for free download afterwards if you're interested. I see you guys are taking pictures. Assign. Assign yourself what it is you need to do to make it a practice. Now, here's the thing about a practice. A practice doesn't mean a to-do. A practice is only a practice when it goes in your calendar, part one, goes in your calendar, and the second part is when you hit the repeat button. If you don't hit the repeat button, there's no practice. Repeat daily, repeat weekly, repeat monthly, quarterly, semi-annually, whatever it is. It's not a practice. They call it an annual practice, a weekly practice, a daily practice. Hit repeat in it. What are the practices you would have to add? And you can make it, again, small changes make a big impact. Small changes make a big impact. Pick, define, assign. Now, I was told that I should just mention some CFP stuff, kinds of things. I think this is a tool we use when we're helping with balance sheet thinking for our clients. And I'm sure a couple side notes on this particular part. The gentleman who's up here talking about getting wills and trusts in order, very true. Not only will it save what he was talking about, the tens of thousands in probate costs, but it's like a little bit of time waiting for probate to occur too. Like a little bit of time. Thank you, gotcha. You all help with this part under the assets. Guess what else? You guys are really helping here, right? And at the end of the day, it's our assets minus our liabilities that produce net worth. So when you're talking with a financial advisor, right, like I can help fine-tune the liability management so as to be in line with helping impact your client's net worth. Let's talk. Now, what is not typically found on a balance sheet, it's normally a separate financial report, is cash flow. When people are in, anybody here a person? Oh, good, it'll be all of us. Okay. So when people are working throughout their life to save and invest for retirement, they're trying really ultimately to build up their net worth. So what they're doing is they're taking whatever it is they earn, and they've got some amount going to build assets in the future to build up this net worth. Okay? And then they want to have as little debt and cost as much as possible. Oh, look, there's mortgages, right? And the idea is to take this income and convert it to net worth until we retire. Then we retire goes the opposite way. People are trying to convert this into this, and it flip-flops. Yes? That's the reverse mortgage. So you can help them all along the way on the mortgage side, on their way to building their net worth, but the reverse mortgage will do the opposite. The reverse mortgage will help you turn that net worth into income rather than let it sit idle on someone's balance sheet. Oh, but they want to leave a legacy. Oh, but they want to leave a legacy. Maybe don't say it as passionately as I'm going to say it right now. How about we focus on making our first legacy never knowingly become a burden on society or your family? How about that as a first legacy? How much better off would we be financially as a country if we made that our first legacy? Oh, but I want to leave the kids. It's like, great. If you want to leave the kids money, I can tell you I can show you the way to leave the least amount of capital to guarantee a promised amount of income to your next heirs. It's called life insurance. It'll be the least amount of capital to guarantee your heirs get a certain amount of money. Here's the premium. If you want to pay it, then I will call it part of your lifestyle. That's fine. But until then, I'm going to presume that the first legacy you want to leave is never to be a burden on your children, your family, and society. Okay, sorry, soapbox, getting off. So now, I hear some of you might be having decent years or two here. And some of you guys may be working through like tax concerns. Some of you are in that. I'm not here like in my CFP role. I'm not here to give financial advice. I can't give financial advice. You're not clients. So I want to do a couple things here real quick. For anybody who is sitting in some spots where you're going, what do I do? Because I have been a certain kind of successful. I can't tell you what to do like advice. I can offer tax insights and tax strategy. There's only one profession that's licensed to give tax advice, and that is a CPA. So you'll ultimately always have to go get the tax advice from a CPA. What I will offer for your consideration is that when it comes to taxes, remember we talked about diversification, strengthening people's situations? Now, first off, where most tax efficiencies come from is when you can afford to take money you don't need today and put it into your future and plan with that money to draw upon it later. That's where you can usually get the efficiencies. If you need everything you made, you're probably just going to have to accept it as income and pay the taxes. Now, anybody heard there's some tax proposals being made right now? They might go up, we're thinking they might. No one knows for sure how much, right? There are many people you need to talk to their CPA. There are many people that go, you know what, maybe it's better to service the taxes now. There are many people who say servicing them in this year, right, could be a good thing because next year it may go up, right? So that's one approach. Now on longer terms, oh look, diversification. He didn't make this stuff up. Like it helps. Anybody heard of tax diversification? What is that? Our society, for whatever reason, is obsessed with this thing called tax deferral. Yes? Tax deferred, tax deferred, tax deferred, so great. You know it's like kicking the can down the road, right? I mean, it can be great. Actually, what tax deferral can do is tax deferral can give you more time to plan for taxes. It can do that. It can let you perhaps time when you're going to receive income to a point, depending on where you're keeping it, okay? But just remember, the taxes will become due at some point. And I think people are just obsessed with it because they don't have to pay them now, but there may be reasons to go talk to a CPA about servicing those now. What I'll offer for longer term is there are other things you can do, like pay the taxes all along the way, defer them until later, or consider tax-advantaged accounts. So there's investment portfolios are like asset allocation. Like when people are investing, they say asset allocation. But there's also asset location. Asset location is what I'm talking about here on tax diversification. You can locate the funds in different places, right? So now, these are just the different ways it gets taxed, this obsession people have with, I'm not going to pay, tax-free, and then, whoops, tax, right, coming out later. How many, just a show of hands, I don't know, I really don't know, no one has a crystal ball. How many of you think taxes are going to go lower over the next several decades? How many of you see taxes getting significantly lower? Let me give you another perspective. From the time Alexander Hamilton created the national debt around 90, to 2001, 211 years, something like that? Yeah, I think 211 years? 211 years. We amassed $6 trillion in debt as a country. First 211 years, $6 trillion. Do you know, like, that's pretty much the amount we amassed in the last year, year and a half? So again, I'll ask you, how many of you think the likelihood of taxes going down is really good? I know it's a hard one to bet on. I don't know. I really don't know. All right? I'm not trying to lead you. I'm just saying, like, So then here's a quick example. If we have the Smiths and the Joneses, and we say the Smiths put all their money in tax-deferred buckets, okay, and then let's say they were targeting $150,000 a year in retirement, and they took it all of this 401k, right? So they had their, it's now taxed because they put in a pre-tax 401k. So they have $150,000 a year they want to take out at today's tax rates from the 2018 passages, right? They're going to pay 22%, $24,000 tax, $125,000 net. The Joneses, because everyone wants to keep up with them, they were tax diversified. 50% in tax deferred, 50% tax advantage. An example could be a pre-tax 401k Roth. Yes? Okay, that would be an example of two bucket. Okay. There's others, not many others in the post-tax, but there are other tax advantage, like certain instruments, muni bonds and life insurance and other things. Okay. So in those, the Joneses also want $150,000 a year, but they're going to take $75,000 out of that pre-tax and $75,000 out of the tax-free. They're in a different tax bracket because they only took $75,000 of taxable. They're not in the same bracket. You see here it's 22, here it's 12. So they're only going to pay $8,600 in taxes on that, taking home $141. So if there's anything I want you to remember for yourself, for clients, is diversification matters. So this is just an example of how diversification can help. All right, so there's a lot of other things I don't have time for. Here's a woman, pretty sure she's a loan originator, in fact. This is, by the way, that is 178,000 likes on TikTok. This is 2.2 million views. And I'd love to have played it. We didn't have the sound set up to play it on this one. And she's got 27,000 followers on TikTok, right? This is the water moving away from the bridges of old. You understand? This is where people are getting their information. Now, Brian asked me to show this, so the only reason I'm showing it. I, too, have done a little TikToking. And not to be outdone, it works, right? So yes, I have over 50,000 followers as well on TikTok. So if in listening to this, you find yourself going, this is the kind of stuff I want to stay on the pulse of. I'd like to be kept up to date. I'd like to know this kind of information as Eric's coming up with it. This is what I do in Expectations. I produce this information. I put it out in videos. I make it available. There's no charge to follow me on social media. This QR code, does everybody know how to use a QR code? Oh man, we're gonna get, okay, you understand, like the water left your bridge. Okay, we're gonna move your bridge back over. You're gonna be okay. All you have, first of all, if you do not want any of my information, do not do this. But if you do want any of the information that I'm putting out, all you have to do is put your camera in camera mode on your phone. Don't take a picture. Don't take the picture. It should just work if you know, I mean, Brian Kent has like a flip phone, so it may not work for him, but but for the rest of you, like if you have like a smartphone, you should just be able to hold it up to it, and it should drop down a little link for you, right? It should pop up a little link when you point your camera at it. And then if it doesn't work, if that's not the case, you can go to nexpectations.com/VIP, same thing. And what you're going to get is just three fields on a form. First name, don't need your last, not trying to solicit you. Email, for what you want, if you want me to SMS some stuff or text some updates when it comes out. And you can choose between three things. Links to follow me on social media where I'll put out this stuff. Access to sketch maps. The sketch maps are what I just showed you, pick, define, assign. That's free and downloadable if you want it. In fact, there's one on how to produce a return on failing fast, introductions that rock, like there's lots of them. So if that's of interest, that's sketch maps. If you want other speaking topics, like there's groups you imagine you want to hear certain messages like this, that's there too. So if that's the kind of thing you want to learn about, Brian Kent also really likes short, concise emails. So one of the things in my social media are subject lines for team coordination and emails. So that's there too. That's so you can get Brian Kent level opportunities of emails. Anyway, so if that's the kind of thing that would be of use to you, you can grab it there. Just fill out the little form. You'll be on my email list, and you can follow me on different social media platforms. Take the time to pick, define, assign for you. Let's not find ourselves with a bridge and no water underneath it. Thanks so much for all your time. It's been great joining you all today.
Hello, hello. All right. Eric, thank you very much. That was terrific information. I don't need to tell you that. You know it. All right. The final segment of the C2 Financial Connect meeting is our purchase business panel discussion. So we've got a number of top producers that are very familiar with and just killing it in the purchase arena right now. And we're going to have them come on up here and talk and basically give up their roadmap on how to develop and maintain purchase mortgage business. So with no further ado, Moose Mao, Kyle Poliniuk, Diane Luongo, and Chris Stearns.
Should I take it, Jay?
Moderator for this is Brian Kent. Brian, come on up. All right.
Hello, everyone. I'm back. This is actually, I think, Eric did a great talk. Desmond did a great talk. Danny's talk, I don't know. It's all right. Is he still here? Oh, he left the room. He didn't even get it. The talks are all good. My talk, good. But, this to me is, frankly, the best part of the meetings, I feel, because this is where the rubber meets the road. These are real originators doing biz and have real advice. So this can be open to a Q&A. Enzo, I don't know if you're in the room. Are you in here, Enzo? No, he didn't come in. But I'm going to start with just some basic questions about purchase for folks who are looking to get back into purchase. Obviously, everybody's busy with refis. So I think, Diane, we'll start with you if you've got a mic, which is great. So just tell us real quickly, what % of your business right now is purchase, and why do you think you're having such luck with purchase?
I think about 60% of my business, 60 to 65% of my business is purchases, and it's increasing. Have a lot of real estate relationships, real estate agent relationships. I'm in 2 real estate offices as their in-house lender. But going to the broker previews, I still go to the broker previews. I tend to soft sell myself and just get familiar with the agents by being in the community, doing things, bringing guest speakers in to these meetings and even the real estate office meetings. And that kind of makes me shine to the realtors because they know that I have people and resources. And, the old saying is, you are who you hang out with. I think I think that the agents are starting to see that I'm bringing value to them with some really professional resources.
Okay. Moose or Kyle, you want to jump in on just to mix up? They've got a mic.
Okay.
Cool, I'll step in. Like Diane, I do some real estate agent business. I try to do buckets. He's the speaker, keynote speaker. He did a great job for us today. He called it diversification. Can't even say it. I call it buckets. So I try to have 10 buckets ongoing that I exercise every week. Networking group. So if you're not in a category-specific networking group, I highly suggest it. I do online leads. I do real estate caravans as well. And financial advisors is another one. And my affiliates, my title, my escrow, my insurance, they send me leads every year. And so ongoing, I just try to exercise. The biggest thing that I do on a day-to-day basis is call my sphere. So I call friends and family on a daily basis. And it's cheap, it's inexpensive, and it's probably my biggest ROI activity.
How many calls are you making per day, you think?
Probably like 5 to 10 at least every day to my sphere, another 5 to 10 to past clients, another 5 to 10 to prospective clients.
Interesting. That's apparently what the numbers say, just in any sales organization, is 40 phone calls a day, which is about what you said there. 40 phone calls a day results usually in 10 contacts, and then 3 appointments come out of that. So if that's something you're looking to do, use the numbers. Kyle, do you want to jump in, and then we'll move to Chris? Just in terms of % of purchase that you're doing, how you got to that point, and any tips. And then also questions. If there's questions, I can come around with the mic. Jay's got a mic too.
Yeah, oddly enough, first of all, thanks for having me up here. It was unexpected, and I'm very humbled. And I really appreciate what Eric was saying. I think everyone should follow first those, and then as it applies, hopefully we can speak more LO language here, but I didn't even know, to be honest with you, until just this morning. Jay mentioned some things. I've always kind of, I guess it's been drilled into my head over the last 9 years, like to just focus on purchase, because many of us have been there. You know, it's not, the rates aren't always going to be there, so the refinance, it's just the biggest, you know, point of diversification. Always focus on purchase, because that's ultimately like what's going to save us in times of higher rates. Of course, there's less opportunities. So yeah, I've always had that focus, but one of my biggest challenges early was connecting the right way to realtors. I was always really intimidated by walking. I mean, that's great that you're in 2 offices, by the way. I mean, I think that everyone should strive to be getting in front of as many agents as possible. So focusing on offices or those that lead them, brokers. I realized that instead of swimming upstream and just being that awkward kid that was like, oh man, I'm the best one to use. I think it's like when I really like learned to connect personally with people. I think for me, most of my stuff is coming from my past clients, and so I've make the experience very personal with them, and I'm not afraid to actually look them in the eye and ask them at the end, how did this go for you? Like, I really want to know how I can do better, because then they're in a safe place to share that. It's a win-win, right? So they share, we learn, and it's natural and comfortable for them to refer. So a lot of, you know, people buy houses, there's metrics on it somewhere, you know. I don't get caught up in data too much, but people buy houses again, and be patient, you know. So I think it's just been a waiting game, and just focusing like on the you know, the purchase business in general for me.
Cool. And then Chris, do you have the mic?
Yeah, so when Brian said those of us looking to get back into the purchase market, I kind of rolled my eyes, because none of us should ever be out of the purchase market. So there's been a lot of low-hanging fruit over the last 2 years. It's been great. To be honest, a lot of the refinances that we've had are from past purchase business. It's from people that I've done loans for in the past, or their friends and family. I'm probably about 55–60% purchases right now, and that's only going to go up as rates go up. So as there's less market share, we're going to have to go out and get a bigger piece of the pie, right? So you got to get you know, your referral partners, your real estate agents, your CPAs. Big box bankers are a big one, because they don't cover a lot of product. Something I've had a lot of success with recently as far as getting new agents is going aggressively after listing agents on my transactions, right? So it's one thing to cold call an agent. I do BNI, which is, I like Moose said that, you know, networking, category specific. I do some realtor preview stuff. I'm starting to visit open houses again, but really going after listing agents aggressively, because they get to see you work. So don't just pay attention to your agent. You should be making calls upon submission, upon appraisal order, upon approval, upon CD, and upon docs. Go aggressively after that listing agent. And then one thing I'm getting better at is just asking for the business, right? Being bold at the end of a transaction. Hey, do you have any buyers I can work with? You've seen the way I work. We closed, you know, successfully. Can I get that next buyer from you? And I've had a lot of success with that.
Awesome. Are there any specific? Oh, Diana. Yeah.
And this might come into what you're going to ask next. I've always considered myself purchase-driven, a purchase-driven lender, and you guys all know out there, a purchase transaction is completely different than a refinance transaction. And when you express that to the real estate agents, the lenders are gone. There's nobody out there soliciting the real estate agents, because they're so focused on the refis. So really, this is an open space for us to go out there and get new agents, because the lenders that they've been working with have kind of dropped them working on the refis. So my pitch always is, I'm a purchase-driven lender, you guys. I've been doing this 35 years plus, and I've always focused on the purchase transactions. The agents like that. And again, going after the listing agent, I always make a phone call to the listing agent when the offer is being presented. I also give my letter, my bio, pre-approval letter, the DU, my bio, and then I make the phone call. Those are all great things, and that's how you're going to get the listing agent, and that's how you get yourself out there also with your buyer's agent, to show them that you're there to help them get the transaction accepted or the offer accepted.
Thank you. Why do you think it's sort of can be an antagonistic relationship between the originator and the realtor sometimes, right? I mean, that's maybe not in your world, because you guys have the recipe, right? You've developed those relationships with realtors. You have a good relationship. But, you know, it's sort of in the industry, there can be this antagonism. Oh, I hate realtors. You know, I can't work with realtors, you know, that kind of thing. I just want to dive into that for a minute. Maybe we can go back over to Moose and Kyle and talk about that a little. Why does that happen?
Well, from my experience, first of all, my percentage of purchase is much less than the other panelists. I'm about 30-something% purchase business. But the number one reason why I feel real estate agents can get kind of contemptual or get angry or cast blame is loan officers that don't pick up their phone. When something goes awry, the appraisal's taking a long time. There was mistakes on the appraisal. There was something that was exposed during underwriting that's causing, you know, is this loan going to close? Is it not going to close? The unknown factor boils over and makes people extremely angry when they're going to be mad anyways. But just picking up the phone, explaining it, be preemptive and proactive in the problem, and just acknowledging that it's there and that you're doing your best. And then when they call for updates every day now, you pick up your phone and just say, hey, I'm just picking up the phone. I have no update. But just to tell them, pick up the phone and tell them they don't have an update goes a long ways. I text one of my referral partners before coming up here and said, hey, what's one thing that from a realtor's perspective? And she said, effective, honest communication and setting proper expectations with the buyer, and that they're overall happy. If they're happy in the transaction, that's one thing that I do, and I don't want to go too long, but when I get my welcome to your mortgage email from one of my favorites that the borrower gets, that's my immediate call and forward the email. Hey, just want to make sure you receive this. And by the way, next time you talk to your real estate agent, because they weren't, you know, on the phone calls over the last 3 or 4 weeks, I'd love you to give them a call and let them know what your experience was from the start to the finish. And they don't go back to that real estate agent and say, Moose told me to call you, but they do. And so when they get that positive feedback,
that's great.
It just kind of stimulates more success.
Yeah, that to me is like if there's one thing I'm writing down, it's that idea. That's great to have the client contact the realtor. Kyle.
Yeah, and so this is a good question for me because, like I said, I had a hard time with agents early on. I don't know what it is. I think to answer your actual question, I think it's the law of averages. I mean, there are just like everyone's in like any household. There's probably, I don't know, every 3 households, there's probably someone that's a licensed agent or whatever. There's a ton of agents.
Right.
So if you average it out, like, are they generally, do you think they're going to all be like to the caliber that you really want to be friends with and work with? Like have a professional, good working relationship? Maybe you don't want to, but don't expect that either. So first off, I would say, well, limit the amount of exposure you have to those that you don't identify yourself as good ones, okay? Right. And yeah, I think I want to echo, what was your name, Brian? Chris, sorry. Chris mentioned, yeah, reaching out to the listing agents. Well, maybe not all of them, because maybe they're not someone you really want to work with, so you can't really get there, and you're going to waste your time. But the ones that you do, that's where I go back to making it personal, right? So ultimately, any referral partner, this is about agents right now, but I do want to talk about total referral partners too later on. Realtors are like your ultimate referral partner because obviously they can give you the most at-bats, especially for purchases. That's obvious. So what does that mean? They have more skin in the game. So if they are referring you correctly, that you will learn if you do a BNI meeting, you learn how to properly refer somebody, they are going to be the ones hopefully doing that well, and they're not going to do that unless you are fully vetted, you follow all the principles Moose mentioned, you got to be there, and you got to own up when you make a mistake, or someone on your team makes a mistake. And I'm big on just making it right. So you have to be honest with yourself. You're not going to be perfect. You're not going to be able to answer the phone all the time. You're not going to be able to give personal updates all the time. But I was just talking to Brandon, the new head of C2 Commercial, about this. we all are just going to do as good as we can. And if you make that promise to your agents or whoever it is that's referring you business, that's all that they're going to hold you accountable for. So that's something that's in your control that you can actually achieve. So if you stay within those boundaries, I think you're setting yourself up for a good working relationship.
And this will be for Chris, I think, other than obviously communication is key. I mean, what are the realtors looking for? Why do the realtors come back to you? I mean, what's the main reason they're coming back to you?
So ultimately, you bring value to their business, right? So go ahead, touching just on the contemptuous, and then I'll get to that question. The contemptuous relationship, I think, comes from when you go after a new agent, you have to understand they're getting touched by home inspectors, escrow companies, title companies, insurance agents. They get so many touches by service providers all day long that they might already have a good lender, but you want to stay top of mind. So going back to what Diane said is, be in your local market, be at the real estate preview. When someone drops the ball, and someone will drop the ball, you want to be the first person they think about when it comes to lending. And then as far as what keeps them coming back, I mean, you guys know the crazy market right now. It's contingency timeframes, it's close of escrow periods, it's, you know, how quickly are you ordering the appraisal on some of my transactions. When I know I have a short contingency timeframe on an appraisal, I'm putting it on my broker credit card up front. And I'm not advocating that everybody does that, but I'm ordering day one of escrow for my good agents in appraisal. And if I lose $500-600, that's the cost of doing business, right? But my appraisal may come back way quicker than if I wait to disclose to the client, wait for the client to sign disclosures, wait for them to fill out a credit card form, and order it on their own credit card. And that gives me a huge advantage over my competition. So it's communication, like Moose said. It is meeting contingency timeframes. It's making sure you close of escrow. And then as soon as something's wrong, like Moose said, just transparent communication. You know, if there's something going on in the transaction, just be honest. Everybody makes mistakes. There's problems on all kinds of loans. Loans are complicated, and so is real estate. Just be honest.
Right. How critical is it? I mean, this is sort of an obvious answer, but I guess I'm serving it up here. In terms of good processing and which lender you use for your purchase business. I'll give that to Diane. Uh-oh.
Processing is processing's really, really huge. I mean, I've had issues with processing, and I'm kind of intense, but I really try to complete a really strong package to give to the processor. But the processors are busy as well, and if you get a processor that's not familiar with purchases, it's an entirely different transaction with that processor than when you're doing a processor that understands purchases as well as refinances. Sure. So I think processing is really a big key. I have 4 different processors now because I'm spreading it out. I can overload a processor and then I get them freaked out and then everything suffers. So I've spread things out, which has really been a huge success in the sense that I'm feeling out who can do what best.
Diversified.
I'm diversifying, exactly. Accountability, I think, is really big as well. When you were talking about being accountable to your agents and even to yourself and to your processors and to your team, most or a lot of people don't have that. I mean, you were even talking about, you know, some of the things that we do with our agents. You know, I found a new book and I was reading it and I texted about 12 of my really strong agents and said, hey, I was thinking about you. I'm reading this really great book and it's, you know, Miracle Morning and, you know, I want to send you the book. And I ordered 20 books and I'm giving them out to the agents. Well, all of a sudden, this last 5 days, we're all talking about it. We're all being accountable to each other. If I inspire my agents to be better, they're going to be better at getting business. And if they're getting better at getting business, they're getting business to me.
Sure.
So that's,
okay.
But yes, processing's huge.
Processing, and then the lender that you choose, obviously you're using certain lenders who you know can make it happen.
Well, and I'm using lenders that I can communicate with. I think communication's really important, equally to our relationship with our lender as our relationship with our realtor, right? Or our borrowers. We want that phone to be picked up. We want them to answer and have answers for us and get back to us within that same day or within a couple of hours. So that's really big for me. I want to be able to pick up the phone and talk to the underwriter. And I guess knowing the process going in as well is really important so that I can streamline those transactions.
But bottom line is, you're not going to start doing purchases and use a lender who you haven't vetted.
Absolutely not.
First,
no, no,
right?
no, never.
Don't just, right.
Never. Don't test a lender,
right.
or start with a new relationship with the purchase transaction. Just do not do that.
Right. So we'll jump back to Moose. So there's the standards, caravans, open houses, maybe some direct mail flyers and things like that. But if I'm an originator in this room and I've been focused on refis, what are like 3 things that maybe I should start doing to get on my checklist? Some concrete things that I can get on my checklist to start doing to go out and start knocking on realtors' doors.
Well, just like anything, you need goals and you need a target. So having a target of 20 real estate agents is a start. Or if you can't handle 20, 10, 5, whatever that target is, and know about them. Know how much business they're doing, know where they're doing the business, know what loan officers they're doing the business with. This is all information you can get. And then, going after them for a face-to-face. And once you get that face-to-face, I heard it, listen versus hear. Listen to what their needs are. Find out what the loan officer that they're currently working with is doing well, what they like, what they don't like, and then offer. Make that offer at the end of the day. So consistently consistently contacting those agents over time will either yield results or they won't, and review that list every 60 to 90 days and keep adding or deleting as the case may be. Just randomly picking them or going out of a production list or a geographical area. Without a target, it's really hard. So defining what that target looks like, whether it's 5, 10, or 20, and then going after them with your value proposition.
And if you go into a realtor's office, you do get an appointment, and they say, Moose, I'm good, man. I'm good. I got my lender. I don't need anybody else. Thanks for coming by. What do you say?
There's 20,000 real estate agents in San Diego. Next. Next. And
right.
I base a lot of this is kind of, I don't know if this is appropriate or not, but before I had Mrs. Mao or Mrs. Moose at home, I based all my calls and my ways I do things and my strategy based on how I used to treat women and date women. Oh. And if you use the same concepts, the same principles in courting a real estate agent, whether he's a 70-year-old man or a 28-year-old woman, it doesn't matter. It's the same concepts and the same strategy, whatever that may be.
I hope you courted Mrs. Moose a little differently than a 70-year-old realtor man, but that's okay.
Same as the real estate agents.
No, that's all good stuff. But wouldn't you? And maybe Kyle can take this. I mean, if you're with a realtor and they're saying, I'm good, okay, move on to the next maybe, but hey, would you mind if I kept you in my system? I'll just touch base every 3 months. Would that be okay? I mean,
do you want me to?
Yeah, sure, that? Kyle, you jump in.
Well, I think Moose might be better on this, considering I got all the objections and I wasn't too great at it. But I would, if I were to talk to my earlier self, because I feel like I could handle it better now, I would accept whatever. I would really try to listen to what they're saying and try to get in and what are they thinking? Like, put yourself in their perspective. Like, are they getting hit up for every new kind of trick by loan officers to get coffee or to, I just want to visit and explain this cool program I have. Whatever your foot in the door situation is, if you're going after a big realtor, I mean, it may not be a good match at the time to go so lofty. I mean, I've been shot down. I see billboards and I'm like, call that lady and see what she's doing. I mean, it's going to be really difficult. So maybe work your way up there, like start with a realtor you're more approachable.
Sure.
But then I would just say, if you were going for someone you just got a big objection, just hear them out, give them time, listen to them and just say, okay, well, I appreciate that. And I know that as a loan officer, I know that I can't do I'm not the best at everything. So if whoever you're working with also isn't, and maybe if something comes up, at least get them to agree to something, you know, just something they can say yes to, even
that's
if it's
good.
nothing. So
Like, can I stay in touch with you? Would you mind
yeah,
if I
or
stay in touch?
do you mind if I fall? I mean, this is really just a general sales practice,
That's
right?
right.
This could,
That's
I mean,
right.
this could go across any
That's
industry,
right.
but it's like, oh,
Yeah.
well, can I call you in 6 months? Can
Well,
I
like-
leave you a voicemail in 6 months?
That's right. And like Chris was saying, because someone's going to drop the ball. Their other lender may drop the ball here or there. So
I wanted to touch on this one,
Yeah,
Brian. So
yeah.
I've been originating since 2012. I was 22 years old at the time, and I got laughed out of more open houses than you can imagine, right? I went in there baby face straight out of college, and nobody trusted me, of course. So I got lots and lots of no's, and you need to take that no graciously. But like I said, try and stay top of mind. So when I was going and doing open houses, if you guys have gotten into this during COVID, I highly recommend going and visiting open houses. You want to stay out of the way if they're talking to clients, maybe drop a business card, but if you can get some one-on-one time with an agent, if I'd gotten turned down in the past, I might specifically drive their market and see if they're holding an open house. And even if I've gotten shot down in the past, I'm gonna go in and just say, hey, how's it going? How's traffic today? Shake their hand. And it's not about asking them for business again because you've been turned down. It's about staying top of mind. And like Diane said, stay in your local market. Go to those realtor caravans. Make sure they're seeing your face somewhat consistently, even if it's every couple of months.
Right.
Because like Brian said, like I said earlier, they have a lender right now. They don't have a lender forever.
That's right. That's right. Yeah, Diane, jump in.
Well, if someone says to me that they're working with their other lender, I always say, oh, I absolutely understand that. My realtors are that loyal to me as well, and I really value and respect your loyalty to your lender. Who's your lender that you're working with? And I ask. And if it's a male, I always say, do you ever come across borrowers that would like to work with a female? So I kind of will approach it that way. Or then I'll joke and say, well, you know, I don't mind being number two.
Mm-hmm.
You know, so then I'll say something about, can I put you on my number two list? You know, some people just have their lenders, and I respect that and appreciate that. But I can be number two. I have no problem with that. So then they kind of laugh and they'll joke with that. But I try to find a way or something that, you know, have you ever had this situation happen? Or so I give myself an alternative. I joke about it. I laugh about it, you know, but and I always respect them for their loyalty to their current lender that they're working with. Because you don't want to make them feel uncomfortable either. Right. But and then I always say, yes, my real estate agents are that loyal to me as well. So it just validates you by saying that your agents do the same thing to you.
I think that's great. And then on the way out, maybe you leave. Did your other lender tell you about this new program? Maybe I'm just going to leave this behind. Yeah. That's
Oh,
nice.
and I'll say that, well, your other
Right.
lender will do this. And again, throw some humor in there. You're building
Right.
rapport with these people. I can't even say that I sit down with agents anymore that, you know, to have a one-on-one to try to get their business. It's because I'm out in the community so much. I kind of had the attitude of, do I want to work with that agent?
Right.
Because I'm not going to work with hotheads.
Right.
I mean, in the very, very beginning, you know, we had to put up with a lot.
Yeah.
But I'm not doing that anymore. I don't need to do that. And the more you
Right.
let go of that, the more the good comes in.
Right. Right. In terms of a realtor saying, I already have a lender, I mean, this is language that also kind of spans across sales organizations. Some language that I've heard before is, well, I'd be shocked if you didn't have your own lender. You're a top realtor. Of course you have your own lender. But then I'd like to be the fallback position. Would you mind if I kept in touch with you? That sort of stuff. So
Don't even
great.
ask, oh, how long have you been working with them? And what do you like about them?
Yeah.
And start that conversation. And then even say, oh, yeah, I know Joe. Joe's great. You know, da-da-da-da-da. Just,
Yeah.
how long has Joe been in the business? Oh, my gosh, he's been in the business not quite as long as I've been, but, oh, you know, almost. Throw your little things
Right,
in there
right,
that, you
right.
know, and
Yeah.
I'll joke about how long I've been in the business.
Sure.
And, you know, how old I'm not, and, you know, all of those things. So it's just, you're building rapport and again, making it light.
I just thought of one thing too. Like, remember, we're brokers, and as we all know, brokers are better. You probably ran into this. I mean, so there's some top agents out there that are working with mortgage retail companies. So, I mean, there's a door that's like wide open. I mean, like, okay, great. Well, of course you've been with this person for 15 years, but what do you do with all your clients that don't fit into their bucket, or what do you do with, you know, pretty much anything else that we can handle? So if your foot in the door is a non-QM loan, I mean, realtors,
right?
I mean, yeah, they just get scared when their clients don't have tax returns they can show. It's like, oh well, a lot of them don't know what to do. at all.
Well, and that's
so
why
have
I
an
ask
answer.
who are they working with to find out.
Yeah.
Are they working with a broker? Are they working with a big bank? Are they working with a direct lender?
Right.
You know, all of those things are questions for us to know that we can combat with the brokers are better. This is what we have, other products that were there available to them.
I think that's all great.
Yeah, it gives you that at bat that you might just need one.
Yeah, we're going to try and wrap up a little bit. Again, if there's questions, they're happy to take them. In Northern Cal, we did the same panel, different panelists. But one of the questions was about technology. Is there any tool that you guys are using? I've got one in mind, but I'm going to save it. That you guys are using in order to help attract realtors, help keep realtors, that kind of thing. Moose.
Well, we do HomeBot, and we'll partner with the real estate agents on that. It's a great tool. If you don't know about it, set a demo and get that started. We do a mortgage coach for every client. We copy the real estate agent on all purchases so they can see, you know, where we're at and where we're qualifying at and what the payment is, what the rate is. Show them everything. But speaking to your point on real estate agents, a lot of times if they know who you are, they see you in the community. They oftentimes will give you a shot when their loan officer doesn't pick up the phone. So just being sure that you're picking up your phone or calling people back quickly. And you know, HomeBot and Mortgage Coach, I think, are the two technologies that I use every single day. MMI Intelligence. If you don't have it, it's a tool where you can show every single real estate agent and loan officer's production in the country. You type in their NMLS number, or when it shows the real estate agent, it actually shows what lenders they're using, how many times they're using, what the addresses are, shows everything. It's pretty cool.
Very cool.
It's called MMI Intelligence. MMI Intelligence.
And if you see Moose's name as the originator, just back off on that one.
Go after that one. HomeBot, where are you guys? I haven't talked to them today much, but it's expensive, but they're really good. I literally have forgotten about HomeBot, and then I'm like, oh yeah, and I've gotten several new deals from them. I know that I think it was Justin from UWM mentioned Tago. I've been in talks with them again and actually working with them right now to pilot something that we're going to hopefully release later to other C2 for website stuff. As far as technology to capture realtors, I know it used to be like, I mean, List Reports is still out there. That can be decent, but it's kind of, I think it's a little bit diluted now. Most of them have kind of got their own stuff for listing their or marketing their listings. But definitely, I would say HomeBot's a really good one to partner up with for technology.
Go ahead.
HomeBot.
HomeBot. Okay.
HomeBot's been great. Send out cards has been really great. Kind of doing something unique with send out cards where you can create a card.
Was it sendoutcards.com?
Yeah.
Okay.
Sendoutcards.com. And you can create a card, and you don't ever touch it. You create a card, send brownies, send gifts with it. It's a personalized card with personalized pictures. People get it in the mail. Thank you for this, or thank you for taking your loan application with me. I've taken a photo of the house and said, soon to be called home when they're in escrow. Nice. Just do some kind of cutesy things. MBS Highway, I signed up for that. I used that presentation that they presented with us about the age of the first-time home buyers and how the birth rate was down in the 70s, which is why in 2007 to 2013, volume was down because there was more supply than there was demand. That was huge, huge impact. I was asked to do 5 other presentations with that one presentation from MBS Highway. It's been a really great talk or subject with consumers when they ask about values going down. Nice. And then I use, so you also get the rate, you know, what are the rates doing kind of thing. I use Hammer is also, he's free.
Okay.
But, you know, when you're talking with somebody, you say, you know, I subscribe to a service that gives me information about what the rates are doing so I can keep my finger on the pulse with that. People like that. You're not just going to go in and lock. What if the market gets better? Kind of have an idea. Remember, we're educating our consumer.
Right.
We're the advisors. So we're educating them. And with the tools that we have, Facebook. I mean, I used to laugh at my daughter every few minutes. She's taking a picture of herself. Well, I've kind of become that person in front of my Zoom meetings, and I'll post it saying, oh, Tuesday mornings are my BNI meetings. I post a picture of myself. Oh, great meeting. I'll post something about the members in my chapter. I will tag the members in my chapter. And people have said to me time and time again, oh, I see you're still working. So all through COVID, every week I was taking a picture of myself on these Zoom meetings and sending them in. So,
Right.
those are the things kind of that.
Yeah, realtors, borrowers, whoever it is, they see it. They see you're present. They see you're around. It's like, you know what? My next deal, I want someone working on that
Right.
who's got their head in the game.
Well, and again, if you're doing your your education or and again, it's also letting everybody know what you're doing. I'm just finished my NMLS license, or training for this, or I'm getting certified for that, or I've posted about today, taking pictures here. Taking a picture of the #1 mortgage broker in the country. Those are really big things to tout on your Facebook page, saying, oh, I'm so proud to be a partner of this. And so using that as what you're doing, people are seeing it and they like it.
Yeah.
It makes you real.
Chris, I think maybe you'll have the final word unless there are any questions.
Yeah, so HomeBot as well, that's ×4. Get on HomeBot if you don't already have it. And then one that we use is a 5-year drip campaign called Top of Mind through Surefire. It's really cool because it co-brands with your real estate partner. So after you close a purchase loan with that real estate partner, and especially the first transaction you close with a new agent, you really want to show them everything that Top of Mind is sending out, because it's a 5-year drip campaign. Will also help you guys out with it's kind of self-serving. It'll help you stay top of mind, so to speak, with your borrowers to avoid things like EPOs and losing business on their next purchase. So Surefire is the name of the company. Top of Mind is the product. It's a 5-year co-branded drip campaign. Right after they close, they get a little address stamper. It's not expensive, and the address stamper is so silly, and most people probably don't use it, but I actually, half of my clients call me up and go, oh, thanks for this cool gift, and it's a really cool one because it's co-branded with your agent, and it's something to show them, look, we're a partner, we're a team, and I'm not just gonna be pushing my name to my client for 5 years, I'm gonna be pushing your name too, so.
Yeah, I mean, just old school technology. I mean, I was at my parents' house the other day. They live here in San Diego. Their originator is with C2. And on their coffee table, they had an old school printed newsletter. I think Stony Brook Publishing did it, but there it was, and sometimes it depends on the person. All the young kids, they probably wouldn't even look at that necessarily, but people look at it. People hold on to stuff like that, and there was the originator right there. I was like, C2.
So Top of Mind is both print and email. Just
there you go.
So it's both. Yeah.
Thank you. I think we're going to wrap up the panel. Thank you again, Moose, Kyle, Diane, and Chris. Much appreciated. You guys can make your way off the stage, and I think we're going to wrap up the meeting here.